Good morning, everybody. Welcome to the first of our 2024 Specialist Mortgage web shows. Already this morning, my mouse clicker, this thing has given up the ghost to actually change the slides, so I'm going to have to do it manually. So bear with me because I have to keep looking to one side. So welcome. My name's Tony Sutton. For those of you who haven't seen one of our shows before, I'm the Managing Director of Specialist Financial Services Limited, and I am your host for today. As with all the speakers today, it's a little bit of a biography, so there's a little bit about me, going all the way back to the 1980s, the early 1980s, and then subsequently I was almost 6 years with a specialist lender, and subsequently was headhunted by a broker. I set up my first company, my first brokerage, all the way back on the 11th of May 1989 at the tender age of 25. They grew that from a two-man operation in a really poky, horrible little office in Wembley that we used to keep the door shut so the other tenants couldn't come in and steal our stuff, to an operation with 141 employees at its peak. And I left in 2004 to set up Specialist Financial Services Limited. You're probably wondering why would I leave to set up a company like that? Because my ex-business partner basically drove it into the ground without my knowledge. Traded very successfully for 4 years until the crash took away all my lenders. No lenders means basically it doesn't matter how many clients you've got if you can't lend them any money. But I stayed with the market, basically don't know anything else, and I've always enjoyed this side of the market, really enjoyed it. Still get that buzz when I complete a deal. And here we are today, and I've got 40, as of September last year, 40 years experience in the specialist finance market. We also always have a little bit of a claim to fame. So this is my latest claim to fame. I have actually mentioned him before. This is my nephew, George, who signed a contract with Eddie Hearn at Matchroom back in 2022. And he just had his sixth fight and his sixth win in Las Vegas, which was on Saturday night on the Conor Benn undercard. 4 times national champion, international gold medalist twice, a name to watch, is all I can say. If you enjoy your boxing, have a watch of him because he's very, very good. Very good. Our sponsor this month, Tuscan Capital, big thanks to them for their assistance and their support. If you can't hear or see us, go to the type your message in the bottom right corner to let us know. That might sound a bit daft, but we can then get it sorted for you. If you still use Microsoft Internet Explorer, I don't think anyone does these days, but if you do, if you are one of the very few that does use it, probably best you switch because you are going to lose basically everything because it will stop working after a while. And we are depending on outsourced technology. Already once this morning, the whole entire system has crashed. We have actually moved office at the end of January. So this is now, I'm broadcasting this from our new training room, which next month I'll actually give you a little bit of a tour because at the moment it still looks like a bomb has hit it. There's drills and tools and God knows what else just to my right. But so it's our first time in here. Everything's working fine so far. Touch wood, and that is real wood. But hopefully that will stay the same. But we are obviously dependent on things like the internet going down or even power cuts, which Berkhamsted is getting renowned for. They're happening far too frequently. If you have a question, again, go to the type your message box in the bottom right corner. We always try to get to all the questions we can. Maybe always also just reread your question before you click send because if it doesn't make sense to you, it probably won't make sense to us either. So just make sure that you're actually asking us something that we're going to understand. And so I'm clicking the wrong bit. And we will, as I said, we'll try to get to questions in the time we have. Okay, so on to today, we have 4 speakers, as always, although we're going to mix it up a little bit this year and do a few different bits and pieces. We've had requests for shorter shows, longer shows, more variety. And we'll always try and cater to what we're being asked for. So next month's going to be slightly different with just 3 speakers, which I'll come on to later. But today's speakers, we got Jaxon from Tuscan, Claire from Quantum, Shay from Allica, and Pauline from West One. In case you don't recognise the names, there's the logos. You might recognise those a little bit better. And as always, 10:15 I'll start, which I think probably was going to be a little bit early today. I'm probably looking to get this finished early today. Just purely so I can continue getting our office to where it needs to be because it is still absolutely up in the air. There really is. But all the staff are able to work. But my desk looks like Steptoe's yard at the moment, for those who remember Steptoe and Son. Today's objectives, as always, and this is something we would never stray from, quite simply, is to make sure that you increase your knowledge in different areas. It's no point us ever running these shows before bridging lenders, for buy-to-let lenders. Never seen the point. It's to give you a broad spread of what's in the specialist market. So we'll be covering specialist buy-to-let. We'll be covering commercial mortgages. We'll be covering residential second charges, and we'll be covering bridging finance. Each presentation lasts approximately 20 minutes, a 10-minute Q&A after each session, and the speakers have set their own questions. Quite often they set questions that are then actually answered within their presentation. So don't give them an easy ride. Ask as many questions as you possibly can. That's really what they're here for, is to present, but also to cover all those things you're not quite sure about. So ask whatever you need to. Feedback and CPD, there's a feedback questionnaire we'll go out after today. There's a little bit of feedback I want to give. This isn't on the questionnaire, but as you can see, for those of you who have attended our shows in the past, we've changed the look because we've been using the same look since 2020 when we first did our very first web show. So we've now tied it in with what's on our website. So I want your feedback on what you think. Can you read it? What's on the screens? How does it look? Is it a little bit too easy yet? Just let me know. The second presentation I'll do later is actually in the old format for one reason only, in that this one took me literally 7 or 8 hours yesterday to get completed. And I was still working on the second one. I think it was 12:30 this morning. I probably wouldn't have up to about 5 if I tried to change all the slides as well, but they will be changed for the next one. But the feedback you give us is absolutely vital, especially on the presenters and what you think and what we can improve, which is what we always strive to do. And your CPD will be emailed to you by 5:30 tomorrow. Now, I'm going to say that in the moment. My head of IT who does this, Simon, has got himself into the office today. He's currently got the flu. So he's in the corner of the office. We're going to barricade him in, spray him with Dettol or something so he doesn't spread too many germs. But he's feeling quite unwell. So if there's any reason that he can't get these will be out to you. We'll try by 5:30 tomorrow. Check your spam box before you make a phone call. Probably 9 out of 10 cases, 10 phone calls we get about not having a CPD certificate is because it's in someone's spam. So check that first. We will try and get them out tomorrow. It might be slightly late depending on Simon's health, but we'll have to wait and see. If there's any downloads you want, so our updated guide is, as always, available. You can download from my website, or later on there'll be a link to where that will give you where you can actually download it straight away. And as always, we've been offering these now for 6 years now. Wow. GDPR compliance, it might not seem a big thing, but as I always stress, it's only when the regulator comes knocking at your door and you've done nothing at all that you wish that you had done something. So if you haven't, they're there, free to download, and quite simply just stuff that I stole from the ICO website, which wasn't really in a usable format, and actually put it in a usable format so that brokers like myself and brokers like you can just ensure you can prove that, yes, I was compliant and I was doing something about it. And the final one is this has proved to be very popular, actually. I decided to do this. And again, I'm not an expert in compliance. So those of you asking for us to do compliance seminars in the future, that's not my bag. It really isn't. But one of the things I'm quite good at is nicking other people's ideas. So when a number of lenders issued some vulnerable customers guidance last year, I just sat there and put it all together. And this was around the time of Consumer Duty came in, and put it in a format that my staff can then read it, understand it. But this is quite simply, it's not just what is a vulnerable customer, it's also what you can do or what you should do. And as this has got the backing of, I believe it was the UK Finance that was issuing this to lenders, I'd be pretty sure it's going to be sort of about as thorough as it can get. So I shouldn't think the FCA will have too many complaints about it. It's free for you to use. Just type in VC into the type your message box, and we'll get that out to you. If you've already had it in the past, then no worries, but hopefully you found it very useful. And Consumer Duty, as I mentioned last time, all the way back in, it's almost 3 months, mentioned last time, I'm not talking about it anymore because I don't need to, because quite simply, because if you want to watch it on catch up, you can do, because for those of you who weren't aware or are new to our shows, we also run something called Sutton and the Specialist. And last year we had 2 sessions with this man, Robert Sinclair, who's the chief executive of Amy. And that was basically what he went through. So there was one in May, one in October, so pre-Consumer Duty, post-Consumer Duty, and Robert is coming back again this year at least once to cover post-Consumer Duty, because this thing ain't going to go away. It's really not. I know how many of you probably feel that it's a complete waste of time, unless you're one of the, I think it was 10% who think it's a good thing. For me, it's just created a load of work to do what I was doing before, quite simply. But it is what it is. We have to abide by it. So these are available for you if you wish. Also available still are our Sutton the Specialist webinars with likes of Roger Morris, Colin Sanders, and I've completely forgotten her name, which is really, really bad. It's completely gone out of my head. It's an age thing, and it will come back to me in a minute. Grace, that's it. I can't remember her surname. The lovely Grace. But we got those three. We had two with Roger last year. He was covering things like EPCs, which obviously has now been shelved for the time being, as we always thought it probably would be. And a very interesting one with Colin Sanders back in November that took place, which he said was one of the best seminars he's done. He really enjoyed it. And remember, for every show you watch, you get CPD points. So when you've actually watched a show online, I believe it's on I've got a YouTube channel, but all these are available on our website. When you watch a show, you get your CPD there afterwards. So if you don't get it, then just contact our people. We also later on have a prize draw giveaway. Now, it's very important that you're actually still watching when I do this later on, which will be when Pauline at West One comes to the end of her presentation. Because if I call out your name and you don't reply, then I draw another, well, basically pull another name, not from the hat, because we haven't got a hat, but I will pull another name. So you have to still be watching to win the £100 Amazon voucher. And there has been a few occasions over the past few months where we've called out names and there's been silence, even though the person's actually still registered as watching. So whether they popped to the loo or just had it on for the CPD, we don't know, but they lost £100. So make sure you're still watching. And if you're one of the, I'm always coming to the end of this, if you're one of the 11% of FCA authorised brokers that are thinking of basically jacking it in because you've absolutely had enough, we saw a load of this happen last year when Consumer Duty kicked in. Certainly sort of brokers that have been in the market a long, long time just thought to themselves, do you know what, I can't do this anymore. It's too much. It really is too much. And I spoke to one fellow who'd been in the market over 40 years and had never had a complaint. So he must have been doing something right. So never had a complaint. And he just said to me, I'm just seem to be constantly trying to prove that I'm doing a fantastic job. And all the rogues out there still get away with it. Still nothing happens until it's too late and they're sitting on the beach somewhere. And then the FCA goes, oh, that's naughty. We're going to legislate against that and make sure it doesn't happen again. And by that time, it's way, way too late. So if you are one of those that think they're leaving the industry, but you have a client bank, give us a call, because we've now got a number of people doing exactly that. And a couple of them are actually earning very, very decent money, So give me a call on the number there. First presentation's about to start. Get yourself comfortable, and hopefully the slides on this one have been okay. I will find out hopefully on the feedback a little bit later, and I'm going to spend the next half an hour trying to get my mouse working. But in the meantime, just about to start this one, so we're going to switch on to the next slide, and hopefully our first speaker will be appearing any second now. So, and the slides will be changed for me, I'm hoping. There we go. Fabulous. Right. So our first speaker, and this will say next speaker, is Jaxon Stevens from Tuscan Capital, who is one of the directors at Tuscan, who I've never met. I don't think I've ever met him. I certainly know everyone at Tuscan very, very well, but Jaxon started in September 23 as sales director, and there he is. Jaxon, can you hear us?
I can indeed, yeah. Good morning, Tony.
Yeah, you're a little bit faint. Just a little bit, but
is that better?
That's getting better. Yeah, it's getting better. So Jaxon joined Tuscan September 23 as sales director. He spent over 25 years in various consultancy and management roles relating to property finance, working in both banks and lenders, as well as on the broking side, as he is a qualified mortgage advisor. Jaxon is passionate about continuing education and raising awareness of additional opportunities that are available in the UK property market. Outside of work, Jaxon enjoys coaching his local youth football team, for which his son plays. I've done that. I'd never do that again. And supporting his daughter in her various dance and drama shows. Jaxon is a fan of trying to play golf. Me too. Although he doesn't get to play as much as he would like, he also likes a good real ale. And Jaxon, by the way, I've been told to say hello from Joe Shoes.
Oh, okay.
Who works for me, has worked for me for quite some time. I believe it's 8 years now. So she says hello because you was at GE Capital a few years back. So you will know Joe Shoes.
I remember the shoes.
Which means nothing to anybody else, apologies. And Jackson's claim to fame, quite worrying this one. Jaxon once appeared on stage with Keith Harris and Orville the Duck. Now, I did try to see if I could find pictures of this on the internet because Google is a wonderful tool for finding stuff that's embarrassing. But there was nothing of Jaxon sitting on Keith Harris's knee with Orville facing him or anything like that. But what did you do with Keith Harris and Orville the Duck?
I mean, it was a Butlins show. I went with my family and they'd asked for volunteers. My nan gave me a little nudge, so I ran down the front of the stage, got selected. I was told when I sit on the stool to open my legs. I know it sounds like it's getting worse, but as I did that, I sat on an inflatable cushion and a blow-up hand came out from in between my legs. The audience roared and I trotted off back to sit next to my nan. So
the end of your stage career in 15 seconds.
Yeah,
right?
yeah, absolutely.
Okay, Jaxon, over to you. I'll see you in about 20 minutes. I know this is the first one you've done, but I know you've been doing these for years and years and years. If after 20 minutes you're only halfway through your slides, I might just come on and give you a nudge. So I think you're okay actually in your slides. You haven't got hundreds. Good luck, and I will see you in 20 minutes. Enjoy, everybody.
Thanks, Tony. Okay, good morning, everyone. Thanks for joining us. So I'm Jaxon Stephen, Sales Director here at Tuscan Capital. We're we are a bridging lender, looking at lending residential, commercial, semi-commercial, HMOs, refurb, and I'll touch on a bit of all of that with you as we move through the slides. But I just wanted to sort of touch on the start of the year, sort of from a market perspective. What I do feel is that it's a time to potentially diversify and look at these more sort of specialist areas potentially, and I'll just kind of explain a little bit behind that as to why that's the case. So we've had a very positive start to the year as a market. We all kind of ran into January with mortgage lenders tripping over each other to reduce their rates across the board, as we were looking at continued reduction of inflation and swap rates coming in sort of at the end of last year and early this year. That bodes well after a period of uncertainty over the last year to 18 months. What we have seen since the immediate start of the year is that optimism has slowed slightly. There was a small increase in inflation. Swap rates have started to increase again. And that has led to some lenders withdrawing lower rate options and increasing rates. But that's not the case across the board. There are some lenders out there certainly still reducing rates. What I do think now is for us all is potentially a period of stability as we look at potentially just incremental changes, if any, hitting the lender markets for a little while. All in all, that should then feed into the house price market and help offer stabilization there as well. So it's all adding a little bit of confidence back into the market. What it does mean, I think, and if you look at a lot of press and a lot of articles that are out there at the moment, is that now may very well be the very best time to review your borrowing or look at additional borrowing if you've been waiting for the right time. With the ups and downs that we've seen, the most important factor is, of course, the advice that comes with a financial professional, such as a financial advisor or a mortgage broker, and it's never been more important for the consumer to seek out that professional advice, and it's very important in the changing market that we're seeing. But as I mentioned, with stability comes confidence, and it would appear that consumers are ready to transact again. We have just had a record month for inquiries in January, and I know from speaking to peers across the industry that it has proven to be a very busy time, and that bodes exceptionally well for Q1, H1, and hopefully the rest of this year as well. So all being well, that certainty and the need to transact should continue through 2024. There's some big events this year, of course, that may change things. But as it looks at the moment, I think we're heading into this period of stability, which is what consumers need when it comes to transacting with property. Again, as I say, it leads me to reiterate the importance of seeking that professional advice. One thing that we're seeing, and hopefully the audience are also seeing as well, is that any landlord or investor clients are potentially diversifying their portfolios to ensure they get the best return. And that can mean some of these professionals are moving into different asset classes or altering the use of particular properties, and maybe looking at other ways to get the best return from their investments. That tends to feed the short-term lending market as clients look at things such as auctions and refurbishment conversions, whether that's a single dwelling into an HMO or currently commercial premises into residential or mixed-use assets. If there is a requirement to change an existing asset, then short-term bridging finance really does come into its own. The key challenge, I think, for a changing landscape of both financial solutions and asset changes is having the ability to navigate the market successfully. And clients should always be made aware of all the potential options that they have when they're considering looking into this market. We here at Tuscan Capital like to help both the consumers and, of course, those professionals that do stand between consumers and lenders a lot of the time. It's often the case that a mortgage broker, financial advisor will do a little bit of this specialist stuff now and again. And it's really our aim here to make sure that you're as confident as possible when bringing up these options in front of your clients. So as well as the clients needing help, we understand that the financial professionals themselves sometimes need a bit of help and guidance. Tony puts on these shows very regularly, and these are all designed at keeping you in the loop, helping you understand different solutions, different markets, and certainly how to access this as well. So this is all part of that process as well. We're happy to help simplify the process and raise awareness of how it works, what's required, and what solutions can be provided. So I'll touch on some of these today. We have a client services team here that run alongside our regional directors and BDMs out on the road. We are on hand to provide support when needed, so that you can feel confident when you're discussing some more sort of specialist solutions for your client bank. And I think it's fair to say the majority of financial advisors, mortgage brokers that I speak to certainly have an element of the client bank that is buy-to-let, it's landlord portfolios, it's people that are looking into this space. So if we can help you feel confident when touching on these maybe more unusual solutions with your client bank, then that's exactly what we're here to do. So we have, first of all, our residential offering. It's where we write most of our business. It's where we help most of our clients and introducers. So we can lend up to a 75% loan to value with our residential offering. Rates typically vary from sort of 0.97 to 1.1, depending on the leverage that we're able to raise. We do offer fixed rates currently as well, but fixed or variable, again, will depend on your circumstances to what's right for you and the experts that you speak to. You guys particularly, where you'll be able to provide the right potential solutions. But within our residential offering, we have a fast track solution. I think people generally look at the short-term lending market when they require speed of transaction, potentially looking at leverage, or as I say, it's maybe to change the asset class, change the use of that asset. So here at Tuscan, we try to provide speed and leverage along with the various solutions that can hopefully assist with any of those scenarios that do come up. So with our fast track offering, we will accept automated valuations. We'll use desktop valuations where we possibly can. And we'll take indemnities. So we'll try to speed up the process so that we're transacting ideally in days, certainly in weeks, and hardly ever in months, really, is what we try to do. Things will come out of the woodwork from time to time that will put delays within the process. But where we can, we want to provide you with that speed of service, because quite often these transactions are extremely time sensitive. I touched on auctions as a potential area for short-term finance. And in the last week, I've been presented with options where there's a 14-day auction window. Typically, it's 28 days. That's not a lot of time to transact. So if you can get all your ducks in a line as early as possible, then having these small changes to our process that we've made over recent years to speed up the process can be a massive help. So that's something we try to do here very, very well. And people do come to us for these solutions quite often. We often an option here where there's no requirement for a PG. up to 65% as well. So it's all really designed for the right deal at saving ultimately time, but also saving money within setting up the transaction for yourselves as well. So there's a few different things that this can be used for. You can see the funding types that are there. So acquisition and auction purchase, we see a lot of that. I think we're really strong in that area of the market. We see a lot of refinance applications. So maybe refinancing an existing short-term loan that's come to term and the exit hasn't been sought at this stage. Maybe it's taken a little bit longer to sell, a little bit longer to finish a refurb or conversion project. So refinancing existing short-term loans is something we can certainly look at. Releasing capital for external projects or other areas, we can certainly look at doing that on existing assets as well. Refurb is a big part of the market. If a property is at auction, quite often a new owner, an investor, will want to put their stamp on it, so to speak, or certainly increase the rentability, if that is a word, of the asset. So spending a little bit of money on refurbishing an asset can be hugely beneficial, and that's certainly something we see a lot of here as well. Development exit finance. If you've been at all involved in development finance in the last few years, you'll know that there have been many cases where there have been cost overruns, there have been time overruns. That all feeds into the exit strategy and how quickly a property can be finished, marketed, let out. So whether it's been retained or whether it's being sold on, lots of these projects are really pushing term when it comes to what was probably a 24-month term, maybe 18-month term to get these properties built and exited. So again, a short-term residential bridging loan can really help to provide additional time. I mean, some people will call it a sales window extension. It's development exit finance where you can provide time sometimes to make small finish elements of that development as well. Might need some landscaping and just final finishes, but ultimately you need to find the time to provide that exit. So we can give you that time with a 6 or 12-month term on a development exit loan, where you can then let the property out and build up an income stream and prove its worth with regards to a term exit if you're retaining, or it will give you enough time to market and sell the property properly, not having to take any kind of small cuts when it comes to the value of that asset as well. So always worth considering if you've got clients who have been potentially coming close to term when it comes to their development finance. And we do multi-asset securities, buy-to-let portfolios, mixed portfolios. We're happy to look at using residential, commercial, mixed-use properties across a portfolio to raise capital or to refinance as well. So again, these are areas that all fall within our fast-track offering. And in my short time I've been here for nearly 5 months now, I've seen some of these transactions that have been turned around in sort of 10, 12, 15 working days. So it definitely works. I've seen it firsthand. So if time is your driving force, and it quite often is when it comes to short-term funding, then we're certainly very well positioned to assist. You can see there the criteria. We do offer up to 2-year terms. So for the right case, again, we can look at potentially, I mean, if it's a serviceable loan, if there's tenants in situ and they're paying rent, we could even potentially look at a longer term for you, so you can maintain the payments of a loan, again, to try and prove the model, try and stabilize that income, show that it works, so you can go sort of back to the high street or any term provider and actually then obtain that exit mortgage product as well. So that's something we've been looking at closely here. Loans typically from £100,000 to £10 million. I think our sweet spot generally is somewhere between sort of 600 and 1.2 million, but we will consider loans so from 100 up to 10 million. That's certainly something that we do look at as well. So our mixed use offering, we tend to view it as residential when it comes to rates and leverage. So again, we feel that's a strong part of our offering, the mixed use stuff as well. So there's lots and lots of opportunities there. We want, as I say, you to feel confident discussing these potential options with your clients. ourselves here, and of course Tony and his team at Specialist Hub are all on hand to make sure if you are bringing this into conversation with your clients, you're coming across these opportunities for the first time, and you're confident to ask the questions. There are no silly questions, believe it or not. I hear lots of questions that people believe are silly, and believe me, I've heard sillier. So make sure you're thinking about these things, thinking about these potential options, because this is really going to benefit your client bank that are looking to potentially to do these changes and make these acquisitions. Certainly, one thing we do offer as well is below market value transaction assistance. So if you are buying, I mean, maybe from auction, or maybe you've negotiated a fantastic below market value purchase price from the vendor, we will assist potentially up to 90% of the purchase price value, providing that does not exceed 75% of the open market value. And we do lend against open market value here at Tuscan as well. And that's another area that we are seeing quite a bit of activity with the below market value transactions there as well. So our refurbishment and commercial offering, we've done a bit of this. The biggest part of our book, I say, is the residential side, but we've certainly transacted lots of refurbishment loans. We like to assist where we can up to 65% of the gross development value, so the end value once the refurbishments have taken place. We can assist with 100% of the refurbishment cost, and that generally really helps your clients to find an asset, feel confident that they've got the budget secured to bring it up to standard, whether that's to do new kitchens, bathrooms. Maybe there's some light or moderate refurbishment elements where they're altering the shape of the property, maybe adding additional bedrooms, maybe creating an HMO, maybe moving office space into residential space. There's lots of areas that refurbishment will cover, and we are here to help assist with the funding of those refurbishments. We'll release those funds in stages across the project length, making sure that the client themselves have enough time and kind of space to do the work they need at the time they need to do it. So there's a lot of information on refurbishment as well available from either myself or Tony and his team. We do see that being an increased area of our business over the next 12 months, as people are looking to take advantage of potentially different assets or change the use of assets. I think we're seeing a lot of change in the property market in general, whether that's the need for commercial space or where people want their commercial space. I mean, we've had a period where people have wanted their own sort of home offices and space at home to work. We're now seeing larger corporate companies downsizing on their commercial space, people hot desking, people coming in a few days a week. So these all lead to property structure changes. Structures, I mean, I'm not talking about knocking walls down and rebuilding, but they are changing the layout. The layout changes are probably more fitting. And that's something, again, short-term finance can really come into its own with. So again, here at Tuscan, very well positioned to assist with refurbishment, bridging finance as well. We ideally want to see, how much is it going to cost? When is that money going to be spent? What professionals do you have involved on the refurbishment as well? But it's easy to get comfortable once you've got an experienced team in place. The plan is very clear. It makes a lot of sense why you'd be moving it from a position to another, and the exit strategy is very clear as well. So do think about these options for your clients, because there's some of them that are probably thinking about it, and they want to be able to have these discussions with their professional advisors. There's no doubt about that. Commercial as well. Happy to lend on commercial assets. Big fans of sort of retail, office space. That's the kind of stuff that we prefer to see. Doesn't mean we won't do industrial warehouses, other bits and pieces as well. But again, 65% loan to value on commercial. Acquisition, refinance, refurbishment, repurposing, all those kind of bits and pieces as well. So residential, commercial, refurb, those are the things that we specialize in here at Tuscan Capital. And as I say, we've got a very experienced team out on the road. So we've got regional offices in Manchester, in Birmingham, and a team in London. We are on hand to come and assist wherever needed. I mean, it's certainly my remit and my role is to make sure that anyone with a potential client in the short-term space is feeling confident and has the knowledge and information that they need to sit down comfortably with their clients to introduce these potential options to them, certainly. I've completed a few deals recently that I just wanted to highlight, kind of covering off some of the scenarios that I've touched on in those previous slides. We had a facility here, the first case study. It was the refinancing of an existing short-term facility, something I mentioned previously. So there was a delay on the buy-to-let mortgage that originally purchased the property to convert it into 2 flats. I mean, it went well, but the process in actually refinancing those finished assets was taking longer than expected. And ultimately what happened is that the lender in situ was then looking at potentially charging additional fees, default fees, extension fees, and they can certainly rack up with some lenders. So I think one thing on a side note to be clear of when you are comparing costs with lenders is to look at the fees and the rates and everything that's involved, but do also consider what may happen at term stage with some of these loans as well. Because again, 12 months might seem like a long time when you're 18 months out and you haven't even made the purchase and you're thinking, oh yeah, it's going to take me X, Y, and Z, but 12 months can soon come around. And you do need to be sure that there's a kind of plan B strategy in place. So do consider those options as well. But these guys here, they were due to be charged, I mean, what would have been somewhere around £15,000 as an extension fee. It was a solid asset. Story made a lot of sense. It fit our fast track process. We were able to complete the transaction in just 9 days, which meant that delay that they'd suddenly that they were victims of was no longer an issue, as we were able to grant them the extra time they needed to get that term buy-to-let mortgage through. With this one, we completed a desktop valuation. We'll look to do AVMs. They'll fit in some instances. I think in this case, as this was a house converted into 2 flats, there may not have been sufficient data for an AVM to pass, but the desktop valuation was absolutely perfect. We were able to refinance the existing short-term debts and provide that important time to the clients to make sure they could get their exit in place. So saving time and money, as I alluded to, it's really what we're all about. Wherever we can, if we can save time, we can save money, then we're happy with what we're doing there. Another case study, slightly different, down in Devon, we had a holiday let facility. It was all going extremely well. Seafront in Devon, 15 holiday lets. Our client, an experienced developer, had obtained planning permission, demolished the existing site. It was a hotel that was there to build these holiday lets. This is a picture of the actual site. You can see they're quite nice. Probably all wouldn't mind holidaying there for a weekend or two. They needed time to get the commercial mortgage in place and prove the income stream. So as I mentioned previously, we do offer 12, 24, sometimes 36 months on service debts. If we can give you the time to get tenants in situ, or even on holiday lets and service accommodation, if you can prove your income on that asset, then you're in a really strong position to go and get yourself a long-term mortgage exit. And sometimes that time itself is valuable. It's hugely valuable for you. So we can certainly do that. In this instance, we were able to provide finance so they could pay off the development lender, as you'd expect. They had a private investor that was also then repaid. And ultimately, we gave them time to run that business, to prove it worked, show the income was stable, and actually prove it worthy of a long-term commercial exit. So that can happen with conversions, with HMOs, with holiday lets, with straightforward buy-to-let purchases. So once that property is up and running and you've proved the income is sustainable, then you're in a strong position to go and seek that term exit. So that's something we do like to talk about here. That whole process of acquisition, refurbishment, or change of asset, and then the stability period, the proving the model works period, and then proving yourself an exit at the other end. Ultimately, in this instance, what this would have provided would have been time to market and sell these assets if the plan was to sell on to another investor, or to owner occupiers, as it may have been as well. So that just providing that time can be absolutely vital. So that's one we completed late last year. And then another example of how the process can work for these investors and development clients that you may have, looking at assets that aren't currently in the best condition. So these will often be snapped up at auction. It might just be that there's been some negotiation had, and you've managed to negotiate some below market value prices or some really attractive terms. We helped a client here purchase this property in auction, so we automatically had that short window to transact. It was a first-time developer, so we did our DD on the site. We understood who he was going to bring in to make the changes that were needed. Property in its current state was unmortgageable. I mean, it was kitchen, bathroom. There was some pretty severe damp in the property, needed some work being done. And then they employed a solid team in place to get those changes done. And we were able to turn that transaction around in just a couple of weeks with all that due diligence as well, utilising elements of our fast track process to make sure that the client was safely and well within time to get a suitable exit in place. Good timing, Tony. I've just come in and is on any questions slide. So
it's not my first rodeo. So.
I'll stop the clock. But yeah, I mean that's an overview of the bridging market, the current market, and certainly where we're positioning ourselves in the market for 2024. And we think it's going to be a pretty good one.
Jaxon, fabulous. I'm going to get you back again. Actually, going to do a one-to-one, I think, because I think you could probably talk about bridging for days, actually, thinking about it, rather even hours. But you know your stuff. You really do. Can tell. But that was excellent. Thank you. We've not had any questions from any delegates, so must mean that you've covered everything. So I'm going to go to the questions that you set yourself.
Okay.
Question one was, this is always probably the most commonly asked question, along with what will the rate be? Before I normally get asked that before I've even taken any details. How long does it take to complete a bridging loan?
Yeah, I mean, I think typically I compare it to the auction window. I think 28 days, I think, is a very typical time frame for a bridging loan to complete. 2 to 3 weeks, all being well. I mean, sometimes you need the wind on your side. There are many moving factors. You've got third parties, whether that's valuers, lawyers, clients themselves, when liaising via an introducer. As I've alluded to there, it can happen a lot quicker. I would say the norm would be 2 to 3 weeks. But, you know, if you've got a particularly tricky case, there's every chance that could take a couple of months as well. But, yeah, if you give yourself 2, 3, 4 weeks, give yourself a month, then there aren't too many lenders out there that should take much longer than that, all being well.
There's always the biggest consideration on a bridging loan for me. It's not just the surveyor who can delay things massively and then normally undervalue the thing anyway. Is the solicitor who's acting for the client. If you got the client solicitor has never done a bridging loan transaction before, it's not going to go through in a week. It's just not going to happen. Getting the right lawyer.
And we see it so often, Tony. I mean, I think it's easy to say delays often fall on their lap, but it's very true. We know that in the industry. I think what we need to do is to make sure they're accountable. They understand their part in the process. They're adhering to strict timeframes. They're acting when they should. And they know that if something's not done within a few days, you're on them again and you're making sure it's being done. And I think it's a responsibility, us as lenders, introducers, clients as well, and the solicitors who work for us, just to make sure there's no hiding. Everyone's accountable for their part of the process. Yeah,
I'm old and grumpy. I'm out at a stage where, quite simply, I just say to my team, just don't use them. Just say to the client, you really have to use somebody who knows what bridging's all about.
Yeah.
Other thing I'd also say is, there's always these things in the press: bridging loan completed in 48 hours, bridging loan completed in 3 days. It can happen, and we've done it before. I mean, the quickest we ever did was 4 days for a regulated bridge. It was over £1 million. And I even got an award for it from the lender as a deal of the month. I don't tend to get a lot of awards because I never put myself up for them. But that is the exception rather than the rule. And I do also know that some brokers who say, yes, I've just completed a deal in 2 days, that's with the lender that they actually completed the deal with. What they don't say is that the deal was pending for 3 months previously and they got a valuation from another lender and something went wrong. So they don't actually tell the truth as such. So I'd always
you can have every type of evaluation, a full legal pack drawn up, and then of course you can talk in hours rather than days. But if you're starting from scratch, it's very, very unlikely.
Yeah, exactly. So delegates, when you see this stuff in the press, a bridging loan completed in, I think I saw one 2 hours once.
Yeah,
really, it's like PR gone crazy. Let's see what else we got. Are there any assets that you won't lend on?
We won't lend on land alone, with or without planning. We're not fans of land. We like built assets here. Some commercial assets we'll just veer away from. We've got some diverse funding lines here. But getting some of the more obscure and unusual commercial assets through them can be quite tricky. But I'd say it's always worth looking, and certainly coming through you guys. If we're not the home for something, then you'll probably find a home for something anyway. So at Tuscan, we won't lend on all assets, but we'll certainly lend on the majority of things.
Okay. I won't ask any more questions. We're at the end of our slot. I just will say one thing because of my contact. I mean, I've been a friend of Colin Sanders, the CEO, for forever. It seems since the 80s. We've been good mates ever since. And we have package status with Tuscan, and I can guarantee you could try put the deal to Tuscan direct, but I guarantee you one thing: you will probably get less through than if you come through us, because my relationship with Colin is probably set up probably better than anyone who's watching today. Let's put it that way, because I've known him for so long, and he trusts me because I've always given his companies a lot of business, and I've never done anything that would cause him to not trust me. So, and I wouldn't do it anyway. So give us a go, because you get the same through. If you come to us, you get the same as if you went direct anyway, but you get the expertise that my staff have got, and of course my sort of like insider knowledge and contacts that can help things get things through sometimes a little bit quicker, decisions like earlier. But Tuscan are a great lender. And also one other thing I'm just going to say, I've actually taken this over time. One other thing I'm going to say, just be careful who you deal with in the bridging side. There's some lenders out there who seem to be offering weird and wonderful deals at the moment, who I wouldn't touch with a barge pole, because I know that all they're interested in is to get that client on the books and then ensure that that deal goes over term. Because if it does go over term, they will absolutely hammer the client in every single way they can to ensure that. Just after COVID, we had two clients who were each charged over £80,000 by the same lender because it went over term because of COVID. And the same lender we come across towards the end of last year, I did mention this last year, who had actually taken a charge over the house of an 80-year-old woman who was looking to do a refurb on a commercial property that she had. And they lent the money on her house to a limited company for something completely different. That's all they're interested in is taking that deal over term. That's all they're interested in. So just please be careful, because lenders like this are the ones that will mean that legislation comes out from the FCA and the whole thing will be regulated at some stage when it really doesn't need to be. We've got to cut these cowboys out of the market as quickly as possible. So that's my first rant for the day. First rant for the year on one of these, actually. I'm sure there'll be plenty more. Jaxon, thank you so much. I will see you again very soon. Maybe we should meet up, I think, very soon as well. Maybe come and see us. I know there's some changes. Our contact at Tuscan is due to retire, I believe.
He is, indeed.
Oh, blimey. So we'll be having a replacement. So maybe you and I need to meet up. Maybe I'll come into town and meet you. But,
yeah, perfect.
Again, Simon will remove you from the room. Don't touch any buttons, because we don't want you switching off the whole thing, because you do have that ability. And we'll speak soon. Thank you again.
No worries, Tony. Thanks very much.
Cheers. Thank you. Okay, on to our next speaker, coming hopefully into the room now, and just wait on the slides to change. They've just changed. Okay, let's see if this is now working. No, it's still. Oh, it is working. Excellent. Okay. Let's see if my clicker's working. So our next speaker, we have Claire Flanagan from Quantum Mortgages, who has presented before. I actually didn't realise she presented at our November show, but as it was so long ago, I've actually forgotten it, as probably have many of you. So not that there was anything wrong with it, Claire, by the way. It was wonderful from what I remember. You marked very highly. But I did forget, actually, you was on that. But it's working. Hey, technology. So everyone, you should have received this in by email this morning, which is Quantum's product guide, which was just, I believe, issued very, very recently, although that one does seem to actually say 14th of December. So there is a new one. We'll get a new one out to you. I've just realised that's the wrong one. There is a new one we'll get out to you, which I think was dated last Thursday, Friday, I believe. So, okay.
There's a new one.
So, a little bit about Claire. Extensive background, more than 15 years in the financial services sector. Claire's career spans across notable roles at Nationwide. I can never pronounce this. Unum, and most recently, You Insure. Her track record is a testament to her proficiency in fostering growth and her exceptional ability to recognise prospects through close collaboration with mortgage firms, all while cultivating robust partnerships. Claire likes to spend the weekends with her other half, Ryan, their 3-year-old son, Finn, and dog, Clyde. She's looking forward to 2024, as she will be attending 4 weddings, one of which is Barbados. Very nice. Claim to fame. Claire was, I hope you're wearing this, Claire, today.
I'm not. I should have got it out.
Disappointed if you're not. Claire was on Blue Peter when she was young, singing in the school choir. She even has a Blue Peter badge to show for it. I'm very disappointed in not wearing that. Okay, I was going to bring in my 100% attendance badge that I got in 1973 to show everybody. But the only reason I got that was because at 10 years old, I really fancied Miss Price, my teacher. So I made sure I was there every single day of the school year, and all I got was a badge. So it's over to you, Claire. I will see you in about 20 minutes.
Perfect.
Thank you.
And thank you for having me again. I know, as you say, I only was on here presenting back in November, but I think it was my first time presenting for you guys back in November. So here I am again in February. This year's flying by already. I don't know about how everyone else feels, but yeah, flying by, but it's all good. So yeah, thank you for having me today. So I'm Claire Flanagan, Business Development Manager at Quantum Mortgages. What I'll be doing is, for the next 20 minutes, just talking you through our proposition, and hopefully it will help you with any sort of buy-to-let sort of quirky specialist cases that you may or may not come across. I think these sort of sessions are always really, really good, because it might be that, I'm discussing something specific and you think, actually, I got a query like that recently and that could help one of my clients, etc. So hopefully it'll be useful for you. So just in terms of sort of introductions, so Quantum, we are a buy-to-let lender. So we cater to the sort of the professional and the experienced landlords in England, Wales, and also Northern Ireland. So because we are a bit more sort of quirky in our approach and what we can lend, we are quite flexible with that. But with that, we do require them to have experience. So we can't lend to first-time landlords, but as long as the landlord has owned sort of at least one buy-to-let property and has 1 year's market experience, we can accommodate individual applications. So that's limited companies, including newly formed SPVs, complex company structures, portfolio landlords, and trading companies. And we'll look at that on the QML Pro range. So a lot of lenders do chase more of the automation, and a lot of it is sort of computer decisions. So a lot of it sort of is a computer says no. However, we do have a sort of human decision-making process. We've got a bunch of really sort of good underwriters, and they have more of a sort of common sense approach to current circumstances, and they will look at it sort of as a case-by-case basis. So, whenever you do get those queries and, you want to send them over to Specialist Hub, we will sort of look at anything if they've got that sort of market experience in the background. Hopefully we'll maximize that tax efficiency, reduce costs, and maximize profit. So our target market, so I might repeat myself here. I feel like I do a lot on this sort of presentation because it does come up so often, but we do cater to that professional landlords. So that's whether they're buying or refinancing investment property. We look at those complex company structures and experienced landlords. So you'll probably hear me say that time and time again. So I do apologise, but sometimes I've had it where cases have come over and they've said, we've got, it might be a multi-unit block, with a studio flat in it that's below 30 square meters. Everything looks great, and I'm like, tick, 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 fine for us to consider. And they go, but they're a first-time landlord, and unfortunately, that means that we can't look at it. So they do have to have that experience in the background, and we do look at those portfolio landlords too. So helping maximise profit, so higher yielding property. So we'll look at those HMOs, multi-units, shared houses. We look at holiday lets, including Airbnbs. New builds, we're happy to consider above or adjacent to commercial premises as well, and that can include sort of alcohol or food premises as well. Studio flats, and we look at the smallest side of the studio flats too, and those semi-commercial units. Tenancy types, we look at the corporate lets from max 5-year lease, multi-tenancies, students, housing association, vulnerable tenants, getting a lot of sort of queries on vulnerable tenants at the moment as well, which again we can consider. And on our QML Pro as well, all tenancy types are acceptable, apart from where there is an element of subletting or an absent freeholder. Unfortunately, we wouldn't be able to consider it in those circumstances. So just a little bit here about how we can sort of help reduce cost. Obviously, I'll go into the products in a bit more detail in a moment, but we can do those day one remortgages, meaning they don't have to sort of wait the 6-month period to remortgage, and that's up to 80% on the open market value. We won't need sort of the invoices or proof of works or anything like that. So hopefully that makes the process a bit more streamlined. Things like TR1 forms are accepted. So we accept the TR1 form. Again, trying to simplify that transfer of legal ownership during the mortgage process. Again, trying to reduce costs and simplify things. No restricted panel. So the borrowers do have the freedom to choose their preferred solicitors or conveyancer. They just need to, I think, go onto the Law Society to check that I think it's SRA registered or something like that. So they just need to be on there, but that they can choose their own solicitors if they have a preference. No compulsory legal advice. So we eliminate the requirement for compulsory legal advice. Again, it's a cost saving as well, and it provides borrowers with more control over the process. So they're just a few bits here on how we can help reduce cost. Helping to maximize tax efficiency. So just a couple of examples. We only require 51% of the shareholders to be on the mortgage application. So that does allow us to consider those, again, those complex company structures. Newly formed companies are acceptable at the application stage. SPVs under a holding company are acceptable if the directors and shareholders own 100% of the SPV by way of shares. So there's just a few things there that we can help to maximise the tax efficiency. And then it just goes on to sort of sources of deposit. Again, we're quite flexible in what we will accept in terms of the deposit source. So I sometimes get quite a few messages and emails sort of saying, oh, I've received sort of a gifted from a family friend or family, you know, extended family or something like that. We're happy to sort of accept them as well. Proof of deposit isn't usually required. And we can look at things like builder gifted deposits, gifted equity, director loans, etc. Again, trying to provide that flexibility in our approach. So adverse credit solutions. So again, we always, obviously this is always sort of subject to underwriter review, etc. But we will consider sort of that adverse credit. You know, whether that's CCJs, they would need to be sort of an amount of £500 or below, and I think 2 is sort of the maximum on that. But if it's a mortgage arrear, we will consider, but then, you know, there might be an explanation that we require as to why we're considering it, whether, you know, that's a life event, it might be a bereavement, it might be a job loss or something like that. But again, because we've got sort of human decision making, they will look at that case by case and sort of decide whether they are comfortable or not to sort of proceed with the application. So we've got quite a few sort of different products. And so I always say, you know, if you've got a query or something like that, always sort of check in to see which product it would sit under, because it might, you know, for different sort of factors, it might need to go on sort of a different product for whatever reason. So our product ranges are really designed to suit the diverse needs of the landlords. So we've got 5 product ranges, depending on the need of your clients. And it starts with our single unit range. So this sort of, I always sort of say, is like our vanilla range, because we do sort of look at all sorts of quirky things. But this caters for sort of standard single unit property, such as houses, flats with a single AST or corporate let. We can, as I mentioned before, we can capital raise up to 80% LTV for any legal purpose. We can also refinance bridging loans with a day one remortgage. That sort of means that there's no need to wait for the normal 6 months, as I said before, ownership, and we won't even ask for proof of works. Again, I mentioned this before, but we can also lend on new build flats, no limit on numbers of stories, and that includes sort of the modern type of, you know, like the city centre blocks that have commercial units on the ground level. And we do look at those buy-to-let investor developments. So quite a bit sort of that we can look at on the single unit range. But as I say, that's sort of our more vanilla range, but we do still look at quite a lot on it as well. With this range, as I said before, they do require experience. So they are required to hold 1 existing buy-to-let with a minimum of 1 year's market experience. And as you can see here, we've got sort of our maximum loans amounts, which can sort of differ again on our sort of different products. So that's the single unit range. Then we've got the multi-unit and HMO range. So that accommodates the HMOs, multi-unit blocks, up to 6 units on this range. And also, if you get any sort of holiday let queries, that would go under this range too. The rooms within the blocks can be of any size, and we don't average. So we'll end up to 75% LTV on this range. And we don't require them to own another HMO as long as they have at least one buy-to-let property in the background. On this range as well, we can even lend where utility supplies such as water and gas are shared between the units, but we can do that up to the 65% LTV. So again, we've got sort of the maximum loans amount on here. And obviously in the southern area as well, that sort of thing as well, it can be a bit more that we can lend. Again, the experience is a requirement in the background. Although they don't need the HMO experience, they will need another buy-to-let in the background. So the holiday let range, as I say, I'll touch on that, but that would, if you were doing an application, that would sit under the multi-unit and HMO range. Again, they need the experience in the background for this, but we will consider property types such as properties located in a local tourist, a known tourist area. They would need to be recognised on a holiday let listing website. It's available up to 75% LTV, and it'll be on the standard AST. And then again, you've got those maximum loan amounts there as well. Okay. So our specialist range. So I see quite a lot of probably the most actually applications come through on this range. So this is a bit more sort of quirky, I would say, a bit more specialised. So we do rely on the landlord to have a bit more experience. And that experience is owning at least 2 buy-to-let properties, which they've owned for 2 years. So a bit more experience there. The maximum LTV on the range is 70%. We can lend on a greater number of flats, including those above or adjacent to commercial premises. So I mentioned that before. And that does include food and alcohol. And we would cap them at 65% if it was above or adjacent to food or alcohol. We look at ex-local authority flats, even if they've got balcony access. And we can also lend on studio flats of any size. So I think my colleague, I might mention this last time on the call, but my colleague Paul had an advisor that had a client who did one, I think it was for 9 square meters in London. So we really do look at any size. So the good thing about this range as well, we can accommodate the smaller loans. So with a lot of lenders, the minimum sort of loan, and on our standard product, to be fair, is sort of 100,000. But on this range, we can look at lower than that. So if you do come across any clients that have those sort of smaller loans that they need, we can accommodate on this range. And we can also lend on the larger HMO scale, so up to 12 units. Another thing we will look at on this range as well is any freehold properties in Northern Ireland. So again, you know, they've got a list here on this page of the different things which I've sort of covered off anyway. But then you've got the maximum loan sizes, and as you can see, the minimum loan 25,000 there, with the minimum property value being 70,000. So it's just a little bit more, well, specialist, probably, hence the name. But yeah, so we are a bit more flexible with that sort of thing. I touched on the, excuse me, the specialist Northern Ireland product there. So it's just a bit more information here on that. So up to 70% LTV, no maximum age, no minimum income, day one remortgage, loans up to 500,000. Freehold holiday lets, freehold properties adjacent to commercial, freehold properties including HMOs. So we've got the expat and foreign national range, which is, again, probably I get quite a lot of queries through on this range. So This enables us to lend up to 75% LTV to a foreign national without any UK residency. So we just ask that they have some form of footprint in the UK. So with all of our products, we don't require a minimum income apart from the expat and foreign national range, where we require them to have £35,000 GBP equivalent minimum income on there. Also, the country they reside in does need to be, we've got basically a Basel risk score sheet on our website. And if it's 6 or below on that, then we are happy to consider. So they need that 35,000 income. It needs to be on the Basel risk score, so 6 or less. And they also require to have a UK bank account as well. So there's a couple more requirements on this range. But other than that, they just need the 1 year's experience and the one buy-to-let in the background. The experience can be in their country of residence, but that'll be on up to 55% LTV on there. So again, quite a common one that comes through. Finally, in terms of ranges, we have our QML Pro range. So it is almost like an even more specialist range. So, and it's for anything that doesn't fit the standard quantum criteria. So any property in England, Wales, Northern Ireland not classified as unacceptable area is in a lettable condition, can be considered up to a maximum LTV of 65%. They do have to have the experience again, so they must have owned 2 investment properties with a minimum of 1 year's market experience. As you can see on this list, again, it's a bit more flexible. So things like freehold flats and masonettes, properties with flying freehold, properties with single skin extensions, the land that's bigger, all sorts of different things on there. We also would consider say it's sort of vulnerable tenants and they've got overnight care, so 24-hour care, or if they've got, say, an office that the carer would go in and out of, sort of thing to look after the client, then we would consider that on the QML Pro range as well. So we're happy to consider quite a bit on there, to be honest with you. Again, they need the experience, but it's one of those sort of ranges where we'll try it, it may fit, considering if it fits everything else, basically. So that's probably our newest, it is our newest product that we've got. And, hopefully most sort of things you come across would hopefully fit on there. Again, no minimum income or anything required either. It's just a bit more sort of quirky in terms of what we look at. So just a bit of information on the ICR and loan information. Just got, the basic 125% ICR for basic rate, 145% for higher rate. If it's a portfolio landlord, we will do the stress rate of 100% at 6% as well. So all of this sort of information will be available should you need it. So when you're submitting a case, it's pretty, straightforward. Just need all the sort of information from the client, certified ID, last 3 months pay slips. Just sort of means that if that sort of information is uploaded day one, then we're not sort of going back and forth when it gets to the case manager to request any information. Then the case manager picks it up with their initial checks and goes through sort of the spreadsheets and everything like that. If they need anything else, they'll come back to you. But we're trying to encourage now uploading that information from sort of day one. Sorry, I realised I was talking quite a bit there, and then I was like, oh God, I've got quite a few slides left. So sorry about that. But thank you.
You're in the last one. There you go. Look.
Yeah, I know.
Perfect.
I thought, yeah.
Great timing.
Perfect. Yes, excellent. Thank you.
Claire, fantastic. Thank you very much. That was brilliant. We've got a number of questions, which I'm just.
I saw them. I saw them popping up, and I was sort of looking at the question. So sorry about that.
No, don't worry. Okay, Michael has. Hello, Michael. Thank you for supporting us yet again with watching our shows. What are your average timescales for application to offer and underwriters to respond to answers provided to the questions raised?
So we have the timescales have improved for recently, for the reason that when you submit a quote now, we kind of ask, I sort of just mentioned it then, we ask for a lot more information up front. And the reason is we were finding before that people were sort of submitting applications, then it was going to the case manager, then the case manager was going back and sort of saying, well, we need this, and this. Then it would go back into our queue again. So we're asking for the information up front to avoid that. But honestly, it really differs on the case, on the complexity, I guess, of the case and that sort of thing. But if we've got everything we need, it can, be with the underwriter pretty fast from the case manager stage. I will see if we've got some sort of standard turnaround times, but honestly, it really does depend on the case and sort of if we've got everything we need and how often we sort of need to come back to you. But they've taken on sort of 3 or 4 more underwriters as well. So because it's just so busy as well. So yeah, they're definitely more sort of aligned with sort of timescales and that sort of thing now.
Okay. Hamid has asked this question, but he was late into the room because he apologised for coming in late. But you have covered this, but it's worth actually mentioning again. So property next door to a food outlet takeaway shop, is this acceptable?
It is, yes. So above or adjacent to takeaway shop, food outlet is fine, but because it is a food takeaway sort of outlet, we would need to cap that at 65% LTV. That would sit on our specialist range.
Excellent. Gemma has asked the question, HMOs up to 6 beds, all en suite and high spec. Do you do a bricks and mortar valuation or a long book investment commercial valuation?
It would be a bricks and mortar valuation.
Okay. Sorry, this question's coming in thick and fast.
Oh, that's right. It's good.
Yes, I've just lost the one I was about to ask. Rachel was asked, for foreign nationals, do you have a calculator to convert their income to the sterling figure?
We don't. No, we don't. But we could always sort of check that for you. I think as long as it's 35 from their currency or 35 GBP, we're happy to accept it.
Okay. Last question we've got is Robert has said, would you accept Serco tenancies, 6 years, 11 months? And if so, on which range?
We would consider Serco tenancies. We'd probably need a bit more information, but we'd definitely consider them. That's probably one of our USPs, and it would either be Specialist or QML Pro. Okay.
And once again, as I said for the first presentation, you can also use Quantum directly, or you come through us because we're an accredited packager. I believe we were packager number 4 that was taken on, and do know their systems inside out, as you can imagine. So you choose, but you get paid the same. And of course, as usual, we've got contacts and other people within the business that we know very well. I've known sales director, again, seems like forever. So if you're giving Quantum a go, hopefully you'll choose to use us to package it rather than somebody else. And also, we don't charge any packager fees on Quantum deals at all whatsoever. Nothing up front, nothing on completion. So always something to take into consideration. Claire, that's it. No more questions. And in fact, I'll tell you what I'm going to do. I'm going to ask one that you asked yourself, purely because we've got a couple of minutes. So what trends do you expect to see in the buy-to-let market this year?
Well, I was talking with my colleague about this, actually, and we were talking about ICR being a challenge. So whilst interest rates sort of remain, unless they have a high sort of fee product, that equity sort of side of it becomes a challenge. But, I mean, whilst that all sort of seems doom and gloom, and there is a lot of talk about people reducing portfolios, etc., we aren't seeing that. We aren't seeing a reduction in portfolios at all. So I think our average is about 14 properties on the books. So we are seeing the opposite, actually. Sort of January, they say, it will slow down and that sort of thing. Actually, we're seeing the complete opposite in the moment. We're seeing more and more sort of landlords, wanting to, even if they've, we were saying become accidental landlords and sort of fell into that space, they're building up sort of portfolios as they go along. So I can only sort of see it growing, really.
One trend I can see actually happening is that other lenders will look at Quantum's range and go, why aren't we lending on this type of property?
Yeah,
when they
exactly.
should be.
Yeah.
Because they'll see that it's actually decent business. I mean, this is probably the most comprehensive criteria we've got from any lender. I mean, it really does cover every eventuality that you could pretty much come across. And it's excellent, absolutely excellent. And I think they're here to stay. I'm pleased to say so. Let's wait and see what happens this year. I think high fees are going to be with us for quite a while yet. A choice of low fee or high fee. We're finding that most clients opt for the higher fee product because it's cheaper.
Yeah.
Quite simply, when it comes to, because the interest rate's so much lower, it's a lot cheaper.
Yeah.
Okay, Claire, thank you very much indeed. We are
Thank
almost
you.
exactly 11:15. You sound like you've got a bit of a cold coming on. So
I do have a bit of, I managed to not cough throughout that. Well, tried anyway. So
you did very well. Go and have a lemsip or
I
something.
will. Thank you.
Drop a scotch.
Yeah.
Simon will remove you from the room, and we will see you again very soon.
Thank
We
you.
won't see you next month. We can't do your hat trick, but we'll see you in a couple of months' time.
Perfect. I'll see you then. Thank you.
I'm not quite sure what happened there. Yes, our next speaker is Shay Stanford from Allica Bank. And you should have received this by email this morning. I forgot to mention, actually, we did resend the correct quantum document to you whilst Claire Flanagan was speaking. So you should now have that. Just delete the old one, should you be using it. So you should have had this. This is definitely the up-to-date commercial mortgage product guide, only issued on the 15th of Jan. A little bit about Shay, who I'm now going to speak slowly because I'm not sure if she's in the room or not. I'm hoping she is. I'm just going to make sure she's actually on as an attendee. No, she's not even on as an attendee at the moment. So we'll see if we can find out where she is. Oh, she's here. She is here. But she's not appearing in my list. Okay, so Shay has experience in both commercial mortgages and property development. Having been in the mortgage industry for the last 10 years, she joined Allica Bank in 2022 as a central business development manager. In her spare time, Shay likes watching football and supports Manchester United. And as a West Ham fan, I shouldn't really be speaking to Shay at all after the weekend, but we won't hold that against her. And she's still not appearing, so I'm talking. Okay, she's in the wonders of technology, everyone. She's in the room, but she's not showing as a delegate, and she's also not showing as a speaker at the moment. So she's now come up as a speaker. Shay, you need to put. Yeah, it looks like your camera is off, Shay, and also your microphone. So I'm hoping that. So she's in. So she's going to try and rejoin. Apparently, she can't join. So for some reason, there's also a possibility someone's clicked the button that was recording today's session. So that's now back on. Good. Okay. Not sure who that was. Okay. And I'll speak this bit. I wish he had a massive claim to fame that I could stretch out for at least a minute or so. So maybe I'll say it 3 times or something. Shay was born in California and is half American. And there's no more I can say on that. So I'm just going to see, she's not in the room yet. So a little bit about Allica. We first contacted Allica back in lockdown, where we found they'd launched into the market. And this was right at the start of lockdown. And one of my team came to me and said they'd been told that Allica were in the market and were actively lending, and they did. And they proved to be an absolutely invaluable lender for us over the last, what is that now, 4 years? Wow. Some of the cases we've been able to get through, quite literally could not get through it anywhere else. And
Thank you. Apologies. It was showing as connection issue for some reason.
Don't worry. You're here. That's the main thing. We can hear you. We can see you. And I've stretched this out about as long as I possibly can. So next time we need a bit of a longer claim to fame, please, Shay. If you can come up with something else, just in case we have any connection problems, because that's the shortest one we've got on record. So we will crack on. Next slide is yours. If you're set, you're okay to go straight away? Yeah. Okay.
Good.
So next slide is yours. I will see you in 20 minutes.
Thank you. Thank you for the introduction, Tony, and apologies, everyone. The wonders of technology. So just by way of an introduction, I'm Shay. I'm one of the Central Business Development Managers here at Allica Bank. And essentially today I'm going to discuss all things Allica with you. So a little bit about us and just our lending criteria and things. So just moving on to the first slide then, highlighting what we'll cover. So as I said, I'll cover a little bit about us, our lending criteria, our products, our processes, and then a bit about what makes us different, and then time for a Q&A at the end. So about us at Allica Bank then. So we obtained our banking license in 2019. So we're a fairly new lender, but we have grown rapidly since then. So we're essentially focused exclusively on giving businesses with 10 to 249 employees the banking they deserve. So we look to essentially empower SMEs. So we will only lend if it's an SME. So we won Best Commercial Mortgage Provider at the 2023 Business Money Facts Awards. And we also won 5 at the 2022 NACFB Awards, including Business Bank and Commercial Mortgage Lender of the Year. Essentially from us, you can expect clarity, consistency and collaboration every step of the way. So just moving on to the roadmap to centric product development for established businesses. So when we first established, we started with credit services and payment services. So we started off with secure loans and asset finance. And in future, we're looking to offer an overdraft facility and growth finance. Moving over to the payment services side, we're looking to offer cash management and current accounts. We do have a business sort of current account at the moment. Any questions about that sort of afterwards, then do let me know. So a bit about us and our proposition to you then. So we essentially understand how important it is to be straightforward in how we work, to act with integrity in what we do, and to essentially deliver customer value and to collaborate with you in building a partnership for established businesses. So essentially that's why we've built and developed our introducer proposition around 4 core values. They are collaboration, integrity, delivery, and straightforward. Now, just to touch on that a little bit more, we do collaborate really well internally. You know, it is one of our core values, but it is actually something we really do put into practice. At present, and that really works well for us because our turnaround times from application through to offer are really quick. So with it taking around 3 working days at present. So yeah, if there's anything sort of urgent on your desk, you know, we can really sort of deliver to provide that urgency. So just moving on to the next slide. So essentially what those core values mean. So we're here to talk through any inquiries, you know, any complexities, anything specific. You have a direct point of contact, and we're here to chat through that. You'll get a considered and consistent view of an application. So essentially, we'll take each application or each case at its own merit. We do not unnecessarily fire questions back and forth. So touching a bit on what I said earlier, you know, we do collaborate really well internally, and, you know, we won't cause that delay of unnecessarily firing back questions. You'll always know where things stand with us. And we'll always take care of your client the way you do. That's something that's really important to us. And essentially, we do have a deep understanding of established businesses and the importance of the introducer channel. So moving on to getting a bit more specific. So here's our lending criteria. So borrower types, we would look to lend to a UK registered limited company, LLPs, partnerships and sole traders. Loan size, our minimum loan is 150,000 and our maximum is 10 million. That 10 million is across total exposure as well. Term, we would lend for a minimum of 5 to 25 years. And we do also have interest-only products for a maximum of 5. Base rate type, so our variable rate, that's above the Bank of England base rate, subject to a minimum base rate of 1.5%. We do also offer fixed rates as well, and they revert to a margin above the Bank of England base rate, equal to the fixed rate, less 1.5% at the end of that fix. So, and that's also subject to a base rate floor of 1.5%. You may have been circulated our product guide. I do think our rates are really competitive at the moment. So to put that into perspective, we can offer a rate as low as 5.95 on a fix at the moment. So yeah, that's really good. In terms of security, we'll always look to take a first charge over freehold and long leasehold property in England, Scotland and Wales. We wouldn't take a second charge or anything like that. We would always look to take a first charge. Debentures and guarantees, we very much assess on a case-by-case basis. So I know some lenders may have a one-size-fits-all approach when it comes to a guarantee. Not us. We would only look to place a guarantee to sort of mitigate something. But we would look to, we'd rather not take one, essentially. Now, this slide essentially just shows what LTV we can go up to in conjunction with the property type. I won't run through this line by line, but you can see we would lend against vacant possession, and we can go a bit higher on a warehouse than, let's say, we could a hotel, for example. But you have a copy of our product guide, so you can refer to that. Now, a bit about what we wouldn't have appetite for. Now, what I always say is, if in doubt, we're always here to have that discussion, because it may be that, on first glance, you may consider that we may not look at something. But again, it could be something we could consider. So if you're not quite sure, then, we're always here to consider. So essentially, we have no appetite to lend for anything in sort of the arms, weapons, or manufacture or distribution as standard. Adult entertainment, gambling, dry cleaners, petrol stations, anything to do with animal testing or football clubs. Now, when I just touched on earlier, we could consider, let's say, a dry cleaners where the dry cleaning was done off site, because then that mitigates the environmental risk factor there. Or we could assist where, let's say, I don't know, a semi-commercial property where there's a Ladbrokes on the ground floor and flats above. If it's on an investment basis, we could consider it. We just wouldn't look at it if it was owner-occupier. And we also have no appetite to lend to businesses operating from religious buildings, nightclubs, residential park homes, or caravan parks. Okay, so a bit about our fees and charges then. So we have a flat fee of £500, and that's the customer will need to pay that upon acceptance of the formal offer. We offer subject to valuation, and that commitment fee is refunded at completion. There will also be a 2% arrangement fee of 2%. That can be added to the loan outside of the maximum LTV for loans up to 3 million. And valuation fees. We're managed. We have a VAS panel. A fee scale is available on our website. Legal fees, again, a fee scale is available on our website. And essentially, as standard, we would rely on the provision of an undertaking for our legal fee to be provided by the borrower solicitor. So essentially, our solicitors wouldn't commence works without that cost undertaking, and the customer must instruct their own solicitor. So we don't offer dual representation. Now, a bit about our application process. So again, I touched on this earlier, but essentially, once a full application is submitted, it gets put in our underwriter's queue for review. As I touched on earlier, our turnaround times are really fast at the moment, with it taking around 3 days. Once some standard KYC checks are done, that's when the offer letter goes out. Once that's received by the customer, they would need to sign the offer letter and return the commitment fee. We would then proceed to instruct valuers and solicitors and push forward to completion. So in terms of decision in principle requirements then, so if any inquiries are pointed in my direction, these are just some of the basic information that I'm looking for at the outset, just to enable me to assess and come back with an illustration. So we just need some company business details, just details of the borrower, the address, any sort of lease terms, details of the loan that they're seeking, the affordability, so rental income or the financial accounts, and details of any other income sources. And then again, it's essentially the same information, but in a bit more detail, what we need for a full application. So again, you have the product guide in front of you, and everything that's ticked would essentially need to be provided to enable us to complete a full underwrite first time. So a bit about what makes us different then. So as I touched on earlier, we very much would look at each case in its own merit. So our approach to personal guarantees and debentures are very much on a case-by-case basis. There is an option to have direct access to an underwriter to discuss a proposal if they have any questions. We would only need 2 years financial accounts rather than the 3. And essentially, you do have an experienced BDM that you can have direct contact with. So you won't sort of go around the houses if you need help or have a particular proposal to discuss. So that's sort of everything in a nutshell. You do have, as I said, our product guide there in front of you in terms of to have a look at our rates more specifically. But yeah, if anyone has any questions around the intricacies of what I've gone through, just let me know.
Shay, thank you very much. We do have one question. We're getting a bit of echo there for some reason. Catherine has said, do you finance pubs if not a nightclub?
We would consider financing a pub, yes, just not nightclubs. But yeah, sort of any pubs or like bars or anything like that, we could consider. But yeah, nightclubs would fall outside of our appetite.
Okay. Siam has asked, hi Shay, is your variable rates ERC free after a certain term?
No, there would be an ERC applied.
Okay, but it's how long does the ERC last for? I think he's probably asking.
So for fixed rates, I believe it goes 5, 4, 3, 2, 1. So it's 5%, then 4%, 3%, 2%, 1% in year 5. In terms of our variable rates, let me just quickly check for you because we've just had some updates to our products. 1 second. Do you mind if I get back to you on that one? Apologies, I can't find it quite quick enough.
It's in the product guide, I believe.
Yeah, it is in the product guide.
So have a look at the product guide. It is in there. I know it's in there because when I update our quoting systems, it's one of the things I always look for to see if there's been a change, because sometimes lenders don't tell us when they change something. Surprise, surprise. But Allica tend to be pretty good, actually. But yeah, just have a look in that. That'll be fine.
Yeah.
Got another question from Joe Locke, who actually works for me and is in the next room. Is also known as Joe Shoes. That's the one I was referring to earlier. Hi, Shay. What do you determine as a nightclub as opposed to a bar with a late license?
Again, we'd very much look at it on its own merit. It may be, would essentially just look at it online. If, let's say, there's loud music and it's open until 3 a.m. or something like that, we'd consider it as a nightclub. But a bar with a late license, again, that's something we could consider. We would just have a look at the business and determine, I guess, by that as to whether or not we would consider it as a nightclub. So yeah, if it's something that sort of music, not much seating, open to 3 a.m., we would kind of consider that as a nightclub. If we have a look at it online and there's lots of seating and it's quite clearly a bar, perhaps not like a dance floor DJ sort of thing, we would consider that more as a bar type asset. So we would be okay with that. But again, it's very much something that we would assess on a case-by-case basis. So if you have something specific you'd like us to look at, then just send it in my direction and we can have a look.
Okay, great. One last question, although there is someone typing. Do you lend to SIPs and trusts?
We don't. It falls outside of our appetite at present. But any changes to that, then we will let you know. I do get a lot of questions about lending to SIPs and trusts. So it may be something that we look to do in future as our book grows.
Probably, if they do bring something, it'll probably be with a minimum loan amount, hopefully, because there's nothing worse than a SIPs finance deal. We had one once that was for 80 grand and it took 11 months to complete and was absolutely horrendous. Yeah, so probably a minimum of 500 grand we normally find within the industry, and actually that makes it worthwhile for all the effort that has to go into it. Shay, thank you very much for your presentation and for being here once again. Great as always. Sorry you had the connection problems at the start. But technology, hey? What can I say?
Exactly.
What can I say? Simon will remove you from the room. Don't click any buttons, and we'll see you again soon.
All right. Thanks so much. Thank you, everyone.
Okay, we're just going to go on to our final lender presentation, which is about just to switch over when it does. And there it is. And I will talk very, very slowly. I'll just make sure she's in the room as well. She is. Great. She's about to appear. So our next speaker, we have Pauline Rylands from West One Loans. I believe they're called West One Loans, who we've sent this to you all this morning. So that's the second charge range, which I believe that's what Pauline's going to be talking about. I believe we might have also chucked in an added bonus of the residential mortgages product guide for you as well, because we are an accredited packager, as you can imagine. But some great products there. Pauline hasn't appeared yet, which is worrying, but hopefully any second now. A little bit about Pauline. She's worked in the financial services industry for more years than she cares to remember. Prior to West One, Pauline was an area manager for a high street building society where her time varied from dealing directly with customers to looking after brokers and supporting them and their clients. Hi, Pauline, can you hear us?
Yes, I can. Thank you.
Loud
Sorry.
and clear. Great. Pauline has worked for West One for over 5 years, and with the managing director, Marie Grundy, helps to run the first charge residential and second charge side of the business. In her downtime, Pauline loves spending time with her Romanian rescue dog, walking her and trying to stop her biting every person she comes into contact with.
A challenge.
Oh dear. Our dog just wants to lick everybody for some unknown reason, but great. Okay, so I will avoid wherever you actually live, like the plague, just in case I get bitten by a Romanian rescue dog. Her claim to fame. Now, I did a little bit of investigation on this, I must admit. So Pauline was once an extra in a film called Going Off Big Time, and that's all she gave us. So I thought, nah, that's not enough. So, of course, I went on Google. So I thought, I'll see if I can get anything from it. So I got, obviously, she co-starring with Bernard Hill, who was in Boys from the Black Stuff, I believe, all those years ago, those you might remember. Peter Kay, the comedian. Stan Baldwin, the other comedian, and some bloke from Emmerdale, who I didn't know his name, but I recognised his face. Not that I ever watch Emmerdale, because I don't. But, and then what I was hoping to do the next slide was to get a picture of Pauline in the film. But unfortunately, her role was so minor, I'd have to actually watch the entire film to maybe actually get a photograph of it. And to be honest with you, I couldn't be bothered. So, but there you go. Her claim to fame, she starred in film. Did you meet any of these people, or was it?
Yeah, we did. It was a lot of hanging around. How anyone can do that as a living is beyond me. Quite boring until your time is up. And yeah, it's a long day for a snippet of fame. Yeah.
I may see if I can watch it at some stage, because it did actually have some quite good reviews, weirdly enough. So I'll watch it.
Was great.
But it was also came out in 2000, so it was sort of 24 years ago. So yeah, but maybe a different hairstyle or two. Obviously, not aged at all in that time, so just a different hairstyle. Pauline, it's over to you. I will see you in about 20 minutes. Good luck and enjoy.
Thank you. Thanks everyone. Great to have you all online. And again, thank you to Specialist Hub for allowing us the opportunity to be able to talk to you today about what we have to offer. Basically, just want to talk a little bit about West One. Sorry, bear with me. There we go. So West One Loans, we were established in 2005 as a bridging lender. And West One is the lending arm of NRIS Specialist Finance. In 2014, West One was bought out by a brokerage called Enterprise. Really unusual, because it's normally the other way around. And basically, the products that we have on offer are there to help your clients and support them through the whole property investment cycle, as you'll see with what we have to offer. We're very well funded, and we were delighted to be acquired by Elliott's, who are one of the biggest hedge fund companies, investment companies in America, with around £600 million assets under management. They've also got a great deal of experience in the specialist market, specialist lending market. So they were an absolute brilliant fit for us. So yeah, as far as West One is concerned, as I say, part of NRIS Specialist Finance. We also have a brokerage within our company as well, but we are run completely separately. Okay, as you can see, the 5 product offerings that we have, more recently our residential mortgages, and I know Marie's coming on, I think, next month to talk about residential mortgages, but I'm here today to speak to you about our second charge proposition. So how relevant are second charges in today's market? Well, I think we all thought kind of, while things are a little bit more buoyant this year and we started off very positively, I think you all agree that the change in inflation going up slightly caused swap rates to go into a complete frenzy. I think it's fair to say that I don't think we're out the woods yet. And I think more than ever, borrowers are really going to need again this year the support of you guys as their professional mortgage advisors. Your expertise in this kind of thing. We've seen it now for probably coming into our 5th year of uncertainty. And as I say, I don't think we're out the woods yet. Last year, we saw around 1.8 million borrowers, homeowners who rolled off a fixed rate, and that's predicted to be around 1.5 million people again this year. But the Bank of England are estimating that around 5 million homeowners will see their mortgage rates or mortgage payments increase between now and 2026, which is actually quite a scary number. As I said earlier, the recent inflation rise, albeit a small one, really did send the swap rate into a frenzy, interest rate increases, which, I hoped we kind of were behind us for, last year. Okay, so why are they relevant to you as advisors? Well, obviously, we've got payment hikes with the increase in interest rates, and debt consolidation, without a doubt, is going to remain prevalent this year. With the increase in mortgage payments and just general day-to-day living costs that everybody is feeling. Also, the stagnant property market. Borrowers are choosing to stay put and to basically improve their homes rather than kind of give them up for a lower value. But that in itself, the lower property prices, is actually great for first-time buyers who, probably for a first time in a long time have kind of thought, yeah, I can actually maybe purchase somewhere now. And basically what we offer is what we call Bank of Mum and Dad, which allows parents or grandparents to raise funds, so to release some of the equity within the property by way of a second charge and gift that over to their children or grandchildren. Also, while buy-to-let market took a hit last year, we are starting to see that people are looking to maybe go into that market. And we're certainly starting to see portfolio landlords, start to pick up these the lower property prices, starting to see properties there that are coming on the market. So again, a second charge could be the deposit, or we can raise the full funds either on a second charge by way of a second charge buy-to-let, or on the client's residential property, whichever they choose. It's also that borrowers who will need to protect their current mortgage terms, albeit they are interest only or, on a low rate, or they're just basically, in a low fixed rate and therefore could be subject to early repayment charges, but could have funds. They could need to borrow funds for other reasons. And also the rise of the product transfer market, which I'm going to talk about now. I think, it's fair to say it's not going away this year. Okay, so I often hear, I don't have clients who need a second charge. And hopefully I'm going to kind of dispel that myth for you throughout this presentation. But it might be surprising for you to hear that around 80% of our current second charge customers sit behind a high street lender, which is quite a statistic when you consider that, you probably don't think a lot of your clients actually need a second charge. That's changing as the years go on. Record levels of product transfers in 2023. It's not going away this year. They accounted for £219 billion worth of mortgage lending in 2023. And it was almost as big as the purchase and remortgage market. And the outlook for this year is around 202 billion. So it's not going away anywhere soon, anytime soon. And I think it's a fair question. How will you meet the needs of your clients if they need to raise capital during their fixed rate period? And also, how are you adapting your business? More and more brokers I speak to are saying that that's pretty much all that they're seeing at the moment. But clients have other needs apart from just reducing their outgoings each month. Okay, so identifying some second charge opportunities. A second charge, without a doubt, will help a client to mitigate against those higher mortgage payments that they're starting to see, and just the general increase in day-to-day living costs. It also provides an option for clients who do want to, that you do product transfer over with their existing lender, but they might need to borrow for further capital for many reasons. And the big one that we're seeing, and we will continue to see, is for debt consolidation, which we allow up to 85%. And it basically, because we also repay those debts directly, it means that that amount is not taken into account for affordability assessment. Our affordability has got to be mentioned. A lot of brokers say that they see cases fail with other lenders but pass with ourselves. We've got loan to incomes above 6 times. We use the latest figures for self-employed applicants. And we can also use up to 100% of overtime bonus and commission where we can see that it's regular and consistent. Okay, again, opportunities. So where you're looking to protect your client's current mortgage terms, they could be on a low fixed rate, or they could incur ERCs if they choose to move and remortgage. They could actually be on an interest-only mortgage, which means that to borrow further funds would mean that they would have to move the whole mortgage onto capital and interest repayments. And also clients who've had a change in circumstances, maybe their credit profile has worsened, and to remortgage them would lose them their high street option, for quite a few years, which obviously is the last thing anybody would want to do. Loan purpose has got to be one of the big reasons as well. And loan purposes that high street tend not to like. So debt consolidation being probably the most used loan purpose that we have at the moment. Home improvements, we're starting to see those increase now. And certainly the need for high-end home improvements. And I've got an example to show you in a minute. But basically, we're looking at clients who, high earners who are looking to raise funds, don't want to, move or disturb their current mortgage. We can also look at lending, raising capital for business purposes, as long as it's not a business startup. And again, we can do that up to 85%. And also the need to pay off tax bills. We saw this more really last year, I think, than we have seen this year, with clients who had probably got themselves into a bit of a mess. They'd had a couple of years, kept cash back basically, and therefore had a couple of years tax bills to pay. And some had taken out directors' loans that they wanted to repay. Things were back on an upward trend, and they wanted to put themselves back in a better situation. Clients who want to purchase a buy-to-let property or even a holiday home. You've still got some people who don't want to go abroad. And if they do, we can also allow them to borrow funds to buy a holiday home abroad as well. And as I said earlier, Bank of Mum and Dad, which allows parents or grandparents to release equity from their property and gift to their children or grandchildren for the onward purchase of their own property. There's also a lot of flexibility in second charges. Loan sizes up to £1 million by referral. Term of the mortgage can go beyond the first charge. So even if you've got a client who's got 8 years on their current mortgage, current first charge, we can take the client right the way up to their 85th birthday. Also 35-year term as standard now. We've got interest-only options as long as it's not for debt consolidation. And we see these mainly for the likes of high-end or high-income earners who are looking to do high-end home improvements on the property. And also no need for conveyancing, which, as we all know, in the first charge world, you get your offer quite quickly, and then basically it's weeks before you actually months before you end up completing. So here's an example here, and I just kind of want you to consider, would this be a client that you would consider a second charge for? So this was a high net worth borrower who was looking to raise £117,000. They wanted to consolidate 2 loans for about £65,000 and do some high-end home improvements, which included building a pergola and an outdoor kitchen in the property. Property was valued at about £2.6 million, and they had a mortgage for £1.6 million that they'd taken out in February 23 with Barclays. The gross annual income, as you can see, was fab. It was $540,000, and they had an excellent credit score. So in this situation, even though they borrowed an extra £50,000, we actually saved the client £860 a month. They took it over a 30-year term, which meant it extended beyond the current term of the first charge mortgage, which was currently nearly 24 years left on that. So you can see how much of a saving can be made. And even £860 for someone who's earning that much money is basically a good option for them to consider. So some features about the products that we have. We've got 5-year fixed rate products starting from 6.89. So you can see the difference now. The margin between your first charge mortgages and second charges has reduced dramatically. We've got loan to values up to 85%, including debt consolidation. And as I mentioned earlier, that can also be for raising funds for business purposes as well. We also have automated affordability, which means it maximizes the borrower's borrowing potential. It means also that at point of sale, you know whether the case has passed or failed. We've got products where we can offer more than 6 times income, and we have loan sizes between £10,000 and £500,000, and we can consider up to £1 million, as I said earlier, on referral. This is one error. Apologies, I am sorry, but yeah, we can go up to 35 years now. We've recently extended the length of our terms, and we can also take borrowers up to their 85th birthday. And something to bear in mind, that if you've got a client who is more than 10 years from retirement, and we class 70 as retirement age, or whatever the client puts, whichever's lower. If the client is currently more than 10 years from retirement and is paying into a pension, we can take them up to age 85 using current earned income, not pension income. And there's a lot of noise at the moment in the first charge world about working ages being moved up to 75. Personally, I'd rather be able to take current earned income up to 85 and keep our pension, our retirement age at 70. We've also got interest-only products available for those high net worth clients, perhaps, who are looking to do the high-end home improvements, and the minimum loan size there is £100,000. And we've also got a range of buy-to-let second charge mortgages available to landlords, again, who are in a very similar position to your residential clients, where they are in a 5-year fixed rate, they can't move around, but they do need to borrow for home improvements, or simply just pay off their own individual debt or their own personal debt, or if they want to raise funds as a deposit to get another buy-to-let and to extend their portfolio. Here's a brief overview of our credit profile, and we don't credit score at West One, we basically credit search. So it means that we look very holistically at your client and their current needs and basically what they've gone through. In a nutshell, we ignore any satisfied CCJs or defaults. We ignore for planned purpose. So you might have a client who had a CCJ or default registered November last year. It was paid off in December. That's absolutely fine for our best range, which is Apex Zero. Apex Zero also brings our best product range, which starts with rates starting at 659. You can also, the clients can have gone one down on any unsecured credit, and it can also be in a number of lines of credit. It's not just one. We also ignore comm suppliers and public utilities, and also unsecured credit for anybody with balances currently below £500, which is ideal for a client who's got maybe a credit card or mail order, who was 6 down 6 months ago, but the balance is currently £450 or is settled, and that's absolutely fine to go on that product. It's also worth mentioning about secured arrears. So we don't want any missed payments basically in the last 12 months. What that initially means, or basically means, is that a client just needs to have maintained at least their mortgage payment. And as long as there are no arrears, they can actually go on our Apex Zero, our best plan. So better probably explained as, if you've got a client who was 6 down 14 months ago, and the profile has gone 6, 5, 4, 3, 2, 1 zeros, we can see from that the client's got no arrears. They've clearly maintained and actually paid more than the normal monthly payment. They would be able to go onto our Apex Zero range, because in effect, they've had no actual arrears this year. So it's worth explaining that one. Anything, like I said before, any CCJs or defaults that are still outstanding, as long as they were registered more than 2 years ago, that's absolutely fine for Apex 0 as well. But we do also have plans where clients could have an outstanding CCJ default that was registered just more than 12 months ago. Okay, so a couple of highlights for you. Self-employed borrowers. We can look at clients who have basically only been trading for 12 months. As long as they've got a full year's SA 302 and tax year overview, then they would be able to apply for our Apex 1 or Apex 2 plans. For clients who have traded longer than that, so 2 years or more, can go on our Apex 0 range, and we will use the latest year, even if it's gone up more than 20%. So if there's been quite a hike in the income, and as long as there's a plausible explanation, we're happy to do that. We verify income for self-employed, regardless of whether they're a sole trader, partnership, or a limited company. We use SA 302s and tax year overviews, so very little need for accountant certificate. We tend to only ask for that for business purposes. And also no need, very rare do we ask for a projection or for bank statements, certainly not bank statements. For employed borrowers, they only have to be in the current job for 3 months as long as they're not in probation. But there are examples where, and what we're saying there is we're not looking at what they've done previously. So for clients who have maybe had a good track record before, similar line of work, same kind of employment, as long as there's been no break, if they're not in probation, we could consider them as soon as they start in their new job. Likewise, if you've got a client who's similar background in a 6-month probation, we'd normally consider those after 3 months, as long as we can get something to confirm that they see no reason why they won't be signed off probation. If a client's been in the job for more than 12 months and they've got regular and consistent overtime bonus and commission, we can look to use 100% of that towards affordability. And for those earning an annual bonus, again, we'll look to use 100% of that if we can see it being paid twice. We can also look to use up to 50% of a second job. We don't have any maximum hours. We just say that it needs to be sustainable. And really what we're looking for there is for them to have done the second job for at least 12 months. Married cohabiting sole applications are accepted, not a problem for us at all. And we can also now exclude them from the household composition as long as we can prove that the partner or the spouse is earning £600 net a month. Okay, so I hope you've seen how a second charge can add value to the current proposition that you offer to your clients, and also to enhance the options that you have available for your clients, and certainly to promote better customer outcomes. You're also covered by full FCA regulation. And the big thing as well is, speed of completion. That's what a second charge is there for. Speed of completion and conveyancing costs and time are just basically not applicable for a second charge, and also niche lending solutions as well. Our products are only available through basically a limited panel of brokers, specialist brokers, such as Tony and his team, who we've worked with for many years. They know our criteria inside out. And I always say to people, you will come across a second charge when we've had this presentation. You will start to see them appear. That it's not worth wasting your time. Please pass them over to Tony and his team, who know what they're doing. Them looking after it for you basically means you can get on with your normal day-to-day stuff and not have to worry about anything else. Thank you.
Couldn't agree more. Pauline, that was marvellous. Thank you. That really was. It was so good that I should have actually gone for a wee halfway through that, and I haven't, which I'm now going to regret because I'm about to do my bit. So wish me luck. We've got a couple of questions. Martin Myers has said, please explain what you mean by no conveyancing.
So basically, there's no conveyancing costs. So our solicitors do their checks and what have you in the background. So there's no conveyancing costs. There's no searches or anything like that done in the background. It's basic conveyancing. So yeah, it's just basically looking after West One to make sure that we're doing the right thing. They check over land reg and make sure that we're not taking on a stupid property that we shouldn't be. But yeah, there's no conveyancing as such done.
Which is pretty much across the entire second charge market, and we're now finding that some mortgage lenders, certainly on the regulated side, regulated first charges, are doing the same. Because let's face it, if I bought my property 18 years ago, if I'd remortgaged 5 times since then, the situation at the moment is that I'd have 5 lots of legal fees because you've got solicitors doing the same job over and over again.
Absolutely.
That's for a property that's already owned. All the legal work was done when I purchased it. All that's happening now is you've got somebody who's going to register a restriction just before completion, get the charge registered, remove the old charge, and that's pretty much it. And just check the time.
Absolutely. Yeah. And Marie will talk more, in the next, I think is it next month, Tony? Marie's coming on to talk about our first charge proposition. And that's pretty much one of the things we've done is we call it fast track legals. So basically it's ideal for anybody who's remortgaging up to £750,000. So yeah, we've picked up what we do in second charges and put it into the first charge world.
And that's the way it's going to go, hopefully, with many lenders. Let's hope so. Because why get solicitors involved just to delay matters even further when they're not actually doing anything that's adding any benefit? They're really not.
This is true. Yeah.
Let's face it. I'm going to continue with questions in a moment, but I am renowned in my office for forgetting something that I knew of about 14 seconds ago. So that's probably why they all call me the goldfish in the office. So we're going to do our prize draw. So Westmont have very kindly said they will give £100 Amazon voucher to the lucky recipient. So I need you, Pauline, to call me a number between 1 and 75.
74.
74. Now, number 74, when I call your name, if you say here or just, yeah, I'm here or whatever, just say something in the type your message. So everybody ready? Number 74 is Verinda Bhatia from It's My Mortgage Limited. Verinda? Yeah, look at that. Blimey. I think you actually started typing that, Verinda, before I even called your name. Wow. Okay, that was very quick. Right. Okay, so Verinda, West One will be in touch and will organise your Amazon voucher. Congratulations. Commiserations to everybody else. We'll now get back onto the questions. And again, apologies. I have forgotten to do that a number of times over the past month. And then had to get the person actually back they actually left the meeting, get them back, and then obviously do that part of it. So for once, I was meant to put a slide in there. Honestly, it's like dealing with me nan. It really is. Right. Okay. So we've got Michael Collins has asked the question. Hi, Pauline. A client is adding a second site for his existing storage business. He has a full-time income from employment of 100,000. Would that be an acceptable business purpose?
Okay. So if he's raising on his residential home, it's certainly something we can look at because it's a business that's already set up. Just kind of would question there that when you say employed income of £100,000, is that from his limited company or does he do that separately? So yes, definitely worth the conversation.
Okay. Let's see. There's someone typing, but we've got plenty of time. We're way ahead of schedule here, so it's really good. How versatile? These are the ones you asked, Pauline. How versatile are second charge mortgages?
Without a doubt, very versatile on the basis of, a client can access larger loan sizes. Like I said earlier, potentially up to £1 million. We've also got interest only options for clients who are looking, tend to be your high net worth clients who are looking to do home improvements. And ones that we tend to see are those who are currently on an interest only mortgage. They're self-employed. They're earning lots of income, but they don't want to necessarily use that to pay for the home improvements. And the attitude is they're always going to downsize anyway. So it gives them the opportunity to live in a lovely house and to improve the equity as well. But obviously with the first charge mortgage, anybody on interest only would tend to have to if they do want to borrow anything extra, would have to move it to capital and interest mortgage, which a lot of people tend not to want to do. Also with, the way the market is going at the moment and the way the economy is going, we're not out the woods, like I said earlier. So for clients who are looking to raise funds to simply increase their disposable income, reduce their outgoings to increase their disposable income, and in some cases, that's just purely for clients to be able to survive. We're seeing more and more clients with a declining credit profile, which we're able to obviously to look at. And we have plans for clients who go from, as I mentioned earlier, Apex Zero, who've got, a good credit profile, to clients who want to pay off an IVA or DMP. So we have something to offer everybody with the product range that we have.
I would also add just one thing. I mean, Pauline mentioned product transfers and how that's increased, obviously, since rates have been going. I mean, how many clients would actually qualify for a remortgage these days if with the rates the way they've increased? Obviously, PTs are very easy to do, more often than not with no checks whatsoever. But your client still has a need to borrow money because not only is their mortgage payment gone up, but their electricity costs have gone up, their gas costs have gone up, everything's gone up, their food costs have gone up. And they're still sitting there with loads of credit cards that they took on when things were really good. Base rate was 0.5%, and they're thinking it's never going to change. There's a whole generation that's never seen interest rates of what they are now. They only knew rates of sort of like low rates of 0.5, 0.75%. So what they're going to do if they don't know you offer this product? I'll tell you what they're going to do. They're going to go on Google. They're going to type in debt consolidation, and they're going to find one of the Money Supermarket or one of the others. What's the one with the meerkats? Can't even remember. Confused.com. And they're going to go on there and they're going to apply. And they then go through, because all of those particular companies deal with Fluent Money. So Fluent Money will offer that client a second charge, take your client away from you pretty much. And they're also now owned by a mortgage advice bureau. So your client is now with a major well-funded competitor. So make sure your clients know that you can offer this particular product, because if they don't know, they will go somewhere else, quite seriously. And we can help you with literature and marketing if need be, if you need some help with that. That's what we're here for. So
yeah, I think it's fair to add to that, Tony, as well, that a lot of people through the pandemic, whilst some people were detrimented financially through the pandemic, there were a lot of people who actually held back a lot of cash because we couldn't go anywhere. They couldn't go on holiday. And a lot of people embarked on home improvements. We're now even still sorting out, because they borrowed on unsecured debt to finance, because the funds weren't sufficient. As we all know, the cost of improvements went up significantly. So they had to then borrow funds. And like you say, when interest rates were really low, it was at a time where it's fine, I can sort it out. And unfortunately, that time to sort it out has never come. And they're now really in a position where they are starting to struggle. Even people who, like I say, you would class as doing okay out of the pandemic, they've definitely got that need.
And there's also something else that came from the pandemic. And I learned this all the way back in 2001. I have mentioned this before on previous shows. When 9/11 hit, I thought afterwards, oh no, this is going to be terrible for, obviously it's terrible what happened, but also for our industry, it's going to be absolutely awful, because people are going to go, no, I don't want to borrow. Exactly the opposite happened. People quite simply thought, do you know what? Life's too short. I'm going to buy that thing, that hot tub I've always wanted to have in my garden. I'm going to get my kitchen done. I'm going to get those windows done because they're falling to pieces. I'm going to do all these different things. And pretty much we found the same after COVID, that people have thought, do you know what? Life's too short. And they are borrowing. They are still borrowing. The people will always borrow anyway, but we always see after there's been some major disaster of some sort, or as we saw with COVID, so it was obviously unprecedented, that people will then go, sod it. I'm gonna do that thing I've been promising myself all these years, and they will borrow to do so. So just make sure you're actually at the forefront of their mind when they decide to do that more than anything else. Make sure they're aware that it's a product you can offer. Catherine has asked the question, do you require a minimum income for self-employed clients?
Just 15,000 for our standard repayment loans. Interest only, and they need to earn a minimum of 50, but that's employed as well. So employed and self-employed, to be honest, we don't differentiate between the two. So, there's no minimum income for them. They have the same LTV, the same loan sizes as somebody who's employed.
Superb. Okay, that's all the questions we've got. Pauline, thank you so much, as always, for your excellent presentation. And I'm now going to go off and watch that film, which the name of which I've already forgotten. That's how bad my memory is. I can remember what I was wearing in 1985, a particular dude, but I can't remember something that happened 40 minutes ago. But thank you very much. Simon will remove you from the room, and we'll move on to the very final part of today, which is me, as usual, covering something a little bit different. And I'm just waiting on the slides to change over. Okay, and I can get rid of all these bits and pieces as well. Okay, so these are the slides that I didn't change to our new format. So please give me some feedback whether you preferred the slides from the first part of today or you prefer these. Is the black a bit too much? Do you prefer it? Is it easy to read? I don't know, because I mean, I can see it on my screen, but everyone's different. Give me the feedback and I'll then try and steer towards what you feel is the best. So a little bit about us. I'm not going to cover too much today. Only because obviously, as I already mentioned, I'm probably going to need a wee fairly soon, and also I don't like to keep repeating the same thing every month. There's very little you can change when you're talking about your own company, because it is what it is. I mean, I mentioned earlier on, we've just moved into a new office, same building, same floor, but double the space. The staff are much happier with the space they've got because it's just a lot more airy. We've got specialist training facilities now, which I'll show you next month as to exactly what we've set up. So please tune in for that. And so we're now gearing up to basically double the staff this year. And just really give it. I'm 61 this year, so I'm giving it the final push. I'm not quite sure what to class it as. But we are certainly seeing so much business coming in. Our inbound call volumes are already about double what they were last year. So long may it continue. So our service, quite simply, as with many companies out there, we either can give the advice to the client, or we can package it and you give the advice. Very simple. It doesn't have to be one or the other. You can mix and match. If there's some products, there'll be people here today that, for example, I know there's commercial mortgage brokers watching today who probably deal with exactly the same lenders that we do, but they won't have anything on the second charge side. And sometimes there's products that we can offer to your clients that will help you get other deals through, or get your deals through that you specialize in. And there's also basically some products that we have full exclusivity on, which I'm going to cover in a moment, because this is actually very new. So that's pretty much what we do. Why are we different? It's not the products we offer. We offer the same as everybody. We offer the same products as Brightstar, the same as Impact, the same as Crystal. I could go on and on and on. Our lender relationships is one of the reasons why we're different. We've not been doing this 5 minutes. I've been doing this 40 years. I've been doing it as a broker now. It's 35 years this year. And that really means that there's a lot of lenders out there that it's not just contacts at board level, it's friends at board level, because I've known them for donkey's years. And because of that, it's a situation my staff tend to deal with, obviously the underwriting staff and maybe the BDMs and the general. If we have a problem on a case, or I want some advice on a case, I'll phone somebody. If it's Tuscan, I'll phone Colin Sanders, who's the owner of the company. He's the guy who makes the decisions. So why wouldn't I? Because I could ask one of his staff, they're going to go to him anyway. Whereas if I go to him directly, he's going to get the full story without any bits omitted, without anything, speak to an underwriter. They go and speak to somebody and only remember 70% of what you've discussed. That's the way we work. That's why we get through so much more business than pretty much any other packager out there as a percentage of what we actually get in. One of the main reasons. I mean, lender relations is absolutely key. It's a good example coming up later, which I know a lot of you have actually already heard in the past, as to a deal that we got through purely because of lender relationships. Why are we different? Also, the people we employ. I mentioned one of my staff, Jo, who's been with me now for 8 years. She's been in the industry, in the specialist industry, since 1995. You can't buy that sort of experience. You really can't. I mean, that means that she knows. So, for example, when she speaks with Tuscan, if she wants to speak with Tuscan on a deal, she'll phone Jaxon Stevens, because it's somebody she's worked with. And he also used to speak about her shoes, hence the Joe Shoes bit. That's where the people we employ. I only employ people with a minimum 5 years experience to actually speak with customers and speak with brokers. Why do I do that? Because I can't be bothered to bring people in from school, from university, and train them up to do a job that basically needs exactly this. Mature with life experience. Absolutely key. Absolutely key that you're dealing with people, and your clients potentially are dealing with people that have seen it and done it. And on the rare occasion something goes wrong, we're not 100% perfect, no one is. If it does go wrong, the fact they can recognise it and then deal with it is one reason why we don't get complaints. And the last complaint we got was 2020. That was for a self-build mortgage, where the mortgage lender, which was a small building society, put all their staff working from home. Most of their staff working from home, or they were furloughed, and it was taking a month to get responses from them. and the client complained, but complained to us about us. It was our fault. I'm not quite sure how, but we don't get complaints purely because my staff can deal with the problems before they escalate, before there's anything, before there are any issues. And that's the reason why the only complaints we get are about lenders, to be honest with you, as probably we all do. But that's the way we work. That's the way I prefer to work. My staff can get on with it. I oversee them. I'm not sitting behind them watching everything they do. I don't need to. And why are we different? It's not our numerous awards in the financial press. The only award I've ever got, and I actually picked this up, it's bloody heavy, by the way, is that, which was award from Together in 2016 for Deal of the Month. And that was for that bridging loan that took 4 days. I don't go out there seeking awards. You all know my views probably on the awards industry within financial services. Great for lenders because there's thousands of people that can vote for lenders. When it comes to brokers, it's about as corrupt as it gets, and I really don't want to be involved in that. I really don't. I have not got an ego the size of Luxembourg that means that I have to win an award. I couldn't care less. I prefer to be judged on results of the cases that my company can get through, not because I've got some tin pot award sitting on the shelf that says I'm the best broker at a particular thing. It's just nonsense, absolute nonsense. Something else we also take very seriously, which I know some of my competitors don't, is the prevention of financial crime and money laundering. We've come across too many examples where a competitor, I can think of one case in particular where a competitor had to let a deal go through for 100 grand with a second charge lender that then subsequently came to us. It was about as obvious a fraud as you could ever imagine. And how they did not see it, I do not know, but the lender was then exposed to 100 grand fraud. Because of us, the client did actually go to court and was then let off by the judge with a suspended sentence. And the Proceeds of Crime Act charge was paid with by the client's father in one lump sum from Nigeria. So I wonder how closely that was looked into. I'll let you decide. But we do take it very, very seriously. I can't remember the last time we had a successful fraud. We probably never find out, but certainly not one that has been found out and has been reported to us. It just doesn't happen. We are very, very hot on this. What else do we offer? One underwriter start to finish. You don't want to be dealing with one person dealing with the sales call, one person dealing with the underwriting, one person dealing with the processing, one person dealing with the completion. It's just one underwriter start to finish, and then the case is passed to me because I pay your commission immediately on the day of loan completion or when I get your bank details. That's probably more key. So if you give me your bank details when requested by one of my team, normally I will pay that within 15, 20 minutes. And it doesn't matter if I'm not here. It doesn't matter if I'm on holiday. It doesn't matter if I'm in hospital. It doesn't matter if one of my kids is getting married. All these examples, I've paid people on the day that has happened. Excuse me. Because that's the way I prefer to do it. I don't like picking files up twice. So I pay you. We don't have a cash flow problem. I'm not going to pass one on to you. No commission clawbacks. Now, I've got to be honest, we've not had a commission clawback in years. So, but even if we do not pass that on to you, unless it turns out to be fraud, not happened, or the client cancels the agreement and sends the money back. And that very rarely happens, very, very rarely. But we do not claw back commission. What else can we offer? Now, we decided, because I'm a great believer, and maybe, I don't know, maybe I'm a bit OCD, I'm not quite sure. But I hate relying on others or other organizations to do a job. So we have to use software to source mortgages because there's just so many products out there. But when it comes to second charges, buy-to-let, specialist buy-to-lets, commercial and bridging, there isn't really a lot out there that I could rely on. And what is out there is not updated quickly enough, in my view. So we developed our own in-house software. So if one of you has a deal, let's say on the second charge, you phone us, you speak to one of my team, you give them the bare details that we need, and we can tell you straight away what is available and not guess. There's no, the rate might be so-and-so. We can tell you what the rate will be and what the repayment will be and what the terms will be, because our software does it. The same with the specialist commercial side and specialist buy-to-let. A lot of the lenders on that do not appear on TriGold, Mortgage Brain and 27 Tech. So we're pretty much offering everybody. I mean, our panel now, I think we now package for 10 lenders in total just on buy-to-lets. But there's a large number of lenders that, as I say, do not appear on those sourcing systems. We can quote you within 45 seconds. As simple as that. It's not, let's face it, this is not rocket science what we do. If it was, I wouldn't be doing it because I'm not clever enough. It's simple. So we try and keep things simple. And we also try and enable to give you the tools that you can sell the products to your clients as and when you need to. Our products, as you can imagine, we do everything quite simply, secured and property, other than equity release. That's not a market that I've ever wanted to go into. And it's not one I'm a big fan of anyway, but I understand the reason it's there. I think it might have some problems in the future. The only thing we do that's not secured on property is probate loans, which are like basically bridging loans, secured, unsecured bridging loans as such, but they're secured on the obviously what the client's due to be getting from a will. But that's what we cover, and we are very, very good at every single one of those. Very, very good. And lenders tell us we are very, very good at every single one of those. I'm not about to launch anything that we don't have a lot of knowledge of, quite simply because I can't then say this is something we have a level of expertise in, because that's just not the way I like to operate. Our feedback. Now, what I've decided to do with the feedback, there's pointless me just having the same feedback every month because it's the best feedback. So I'm going to be trying to pull every month, depending on the clients actually giving us the right feedback. So this is one that was from last Wednesday. I won't read the whole thing, but basically Kirsty, who heads up my regulated team, assisted this is a broker, Tom. I'm not sure if he's here today. Assisted him with a bridging loan in December. Diligent, extremely knowledgeable. I'll let you read the rest of it because I'm going to have a sip of water because I think my coffee's now gone cold. I'll just read the last paragraph, actually. I would certainly not hesitate in recommending Kirsty and Specialist Hub services or revisiting them in the event of my own needs. Thank you, Kirsty. Now, we get stuff like this all the time. I've got A4 folders. I think we found 6 of them whilst we was doing the move that are just literally full of positive feedback. And they go back to 2004. And that's the way we like to work. That's what we like. We like to see that our broker partners have that type of experience. So it's not just the broker partner, it's also the client as well. Even if we're packaging, the client needs that positive experience because otherwise they might not use you again, quite simply. So that's feedback. I'm going to try and make sure we have similar every single month with new feedback. Not always easy to do. If you do look on Trustpilot will probably remove it because Trustpilot are renowned for removing stuff because they think it's fake reviews. It's not, as you can imagine, but they've done it so many times in the past. It's quite frustrating. And look, a few case studies. Now, I changed this one last night. Now, this is one I have gone through before, where we completed a bridging loan all the way back in 2021, client purchasing an HMO that had 20 bedrooms but only had permission for 10. So his idea was to obviously obtain planning permission to get the extra rooms. Lots and lots of problems, mainly because planning department at his local council, all their people working from home and weren't doing a lot of work by the sounds of things. On the first one, our broker partner, we acted as packager on that. And the broker partner earned 21 grand. A year later, or about 11 months later, came back to us because the planning still wasn't through, and we managed to arrange with Roma Finance again a new deal, and broker partner earned 25,000 on the day of completion. Now, more recently, we've just arranged the exit. Now, unfortunately, because of what's probably one of the worst valuations I think I've seen in recent years on the property, it valued at 1.1 million less with improvements than it did on the first valuation that we had with Roma Finance, which caused a bit of a problem, as you can imagine. So we had to look at what other properties there were. So we managed to raise finance on 3 properties, the one that had the bridge, a commercial property, and another commercial property that was up for sale and was in a pretty poor state. We managed 3 deals, which raised enough to repay the existing bridging with Roma Finance. Our introducer earned 20. It was actually, I'm getting the exact figure. It was over 27 grand on the day of completion. So on there, you can do the math yourself. That's 73,000 pounds plus across 3 cases on one client. And this is for somebody who's a wealth manager. And he basically packaged he wanted us to package the first one. He gave the advice. And since then, he's decided he doesn't need to give the advice on his mortgage clients anymore. So it gives it all to us. So if you are in the wealth management space and you find the mortgages are dragging you away from what actually earns you really, really good money, give us a call, because we now do this for so many wealth managers, and probably 7 of my top 10 introducing broker partners are wealth managers now. Quite weird, but the type of clients they've got, obviously they've got clients that they need a wealth manager, so they've got some dough to start with. But we're now the provider of all their mortgage business as well, which is great for us. So that was 3, all completed on the same day. Absolute nightmare when it comes to solicitors, as you can imagine, especially as the client solicitor was not great. Another case study, I've mentioned this one before, the most difficult case I've ever done or ever been involved in. When you come across clients who have lived abroad for over 20 years and are very, very wealthy and have left everything in the hands of somebody they trust to get a job done, who basically hasn't done that job for 20 years, and plus a solicitor who they've relied on to do certain jobs over the years and have paid him handsomely, and guess what, he hadn't done the jobs either. 5 of the properties, 19 properties still had charges that should have been repaid or should have been removed 15 to 20 years ago. A lease on one flat had never been registered since 2006. They'd never sent off the paperwork. It's only when I discovered it, working late one night trying to find out what the hell was going on in this deal, that I found out it hadn't been done. And guess what? The next day they applied for it. Even one property that was offered as security, we were told, yes, the clients own this property, which we couldn't get a land registry search on, so we couldn't confirm it. So we instructed evaluation, and guess what? The tenant wouldn't or the owner wouldn't let them in because he didn't know what the hell was going on. We then found out, actually, no, that property was sold all the way back in 2012, and you should actually be valuing this other property, which we knew nothing about. It was horrendous, absolutely horrendous. Properties with ASTs in the wrong name. ASTs they couldn't find, properties that hadn't been insured for years. This is what was going on. So, most difficult case I've ever been involved in, we got it through. I worked extremely hard on this, and the introducer earned £45,000 on the day of completion, and he didn't get involved at all. I dealt with myself and my team dealt with everything. This is what he said, and this is where I have another sip of water. If I give you more than 5 stars in a wood, I'll let you read some of the rest of it. Now, this is somebody who's retired from mortgages or retired from the industry, has a large client bank, and he now has basically let his client bank know that he's still able to introduce clients to somebody, and this is basically what he's now doing. He's earning more money than when he was actually in the industry by putting the deals through us, which I know might sound ridiculous, but that's the truth of it. He's earning more than he was when he was actually in it. So he's a happy retired man, as you can imagine. Another case study. This one, we're now refinancing all of this for this client. We've just had the first one go through. Title borrowers, I mean a lord and lady, came to us in the middle of COVID lockdown, aged 86 and 82. What was a major thing that happened during COVID when it came to borrowing? Lenders didn't like lending to anybody over a certain age because we had a disease, excuse me, that was affecting the older generation. Refinance of 18 properties, all in the same village, so concentration issues. The number of lenders that would actually assist on this was minimal, as you can imagine. All the properties were in their name, in their joint names, lord and lady's name, not in a limited company name. They were additional rate taxpayers, and so it went on. They've been defrauded of money on many occasions and therefore didn't trust anybody. It took a lot of coaxing. Several visits up to their estate to just basically let them know that I wasn't a crook. Second most difficult case I've ever had to deal with, and introduce a partner rental 30 grand on the day of completion. And these aren't, I'm giving some big amounts here. These aren't unusual for what we do. That's basically the type of business we do. The small stuff, we do the big stuff that earns the big bucks as well. And as I mentioned, we're now refinancing everything away from Castle Trust onto term mortgages with a longer term. And this is the one that I'll probably be dining out on this for the rest of my life. Husband and wife business, 2 very profitable children's nurseries. And Mr. on the financial side had defrauded over 19 years, HMRC of £850,000, sentenced to 5 years in prison. She divorced him because she knew nothing about this. She looked after the kids. He did all the finance. She didn't know that he was spending the money on things that he shouldn't have been spending money on, which I won't mention. Everything that was in joint names either had his name on, which was their home, their business premises, buy-to-lets, had a Proceeds of Crime Act charge. Now, the big problem when you get a Proceeds of Crime Act charge registered is that existing lenders want to walk away for obvious reasons. Northern Rock Residential Mortgage had expired on this one. Barclays had called in both commercial mortgages. She's about to lose everything. Her business would have gone the lot. And this is she had 300 grand in her business current account. That's how well the business was doing. But it had been declined by everybody. So it had been through numerous other brokers, declined due to reputational risk, which is the worst thing you can ever get when you're a broker, reputational risk, because sometimes it doesn't make a lot of sense. It really doesn't. But on this one, I could see, yes, reputational risk, but there's a deal to be done here. It wasn't her fault. It was the ex-husband's fault. So we contacted Together Money, as had many others also contacted Together Money. Case declined by their compliance department. It was a case of the underwriter who my staff spoke to, going to compliance, and they said, no, we're not touching that Proceeds of Crime Act charge. We've got to justify our existence. So here you go, we just justified it. Given to me as a decline. I sign off all declines just to see if there's anything I feel we can do. I had a 10-minute conversation. I thought, no, there's something to be done here. So I phoned a director who I've known since the 80s at Together, won't say his name, gave an overview of the case in the background, and he's gone, well, why wouldn't we do that? Because your compliance department doesn't want to. So him being him, he said, give me 10 minutes. He went away, spoke to his compliance department. Big difference when a director goes to a compliance department and says, why aren't we doing this? Why are you turning away business like this? And they can't justify it because it's wrong. Came back, yes, we can do this. We managed to get everything refinanced, the whole lot. Everything was done. So we Together did the 2 commercial mortgages. They also did the home away from Northern Rock. And we also got the Proceeds of Crime Act charge repaid. There was no CCJs. There'd never been any arrears, never missed a payment. So all this went through, introduced rent just under 12 grand on the day of completion. And then over the coming months, I think it was after about a year or so, we refinanced onto the high street again with Lloyds for the client, and onto a standard Resi high street mortgage for her residence, and also the buy-to-lets as well. I still speak to her to this day, and this was pre-COVID, and she still, every single time I speak to her, she always says, "I just cannot thank you. You saved everything I'd ever worked for," and that was because of one 10-minute conversation with somebody that I considered to be a close friend. Why didn't others do that? I have no idea. So if you want to submit a case, complete our feedback form together with a type of inquiry. So that's going to be something that appears fairly soon. You can complete a decision in principle form, downloadable from our website, or I think we're probably going to be, are we going to be sending you some today? We're probably going to be sending you a link, but you can download all these from our website. Go to our website, you can submit them online, submit cases online, or just give us a call on the free phone number or on our standard landline number, 01442 935 935. My staff are ready to take your call. If you are on LinkedIn, you should have had a request from, it's not actually from me, it's from my staff, but the account's in my name. Should have had a request from me if we're not linked on LinkedIn, if that's the right term. If you haven't, it's probably because we can't find you. So if you would link me direct, and also if you can follow Specialist Hub, because my target for this year is to double our number of followers on Specialist Hub, and that just, if you do use LinkedIn, it keeps you up to date with what's going on with our shows, new product launches, etc., etc. If you are already registered with us, so there's no need to register because you've already registered for today's show. So we've already got you on our system. But if you wish to give business to us, I need an agency application form signed from you before I can pay you. I don't need one before we can take a deal from you. Just to make you aware of that. But I do need something signed before we can actually issue commission to you. Again, download from our website. Our next Specialist Mortgage Web show, I mentioned that we're making a few changes. Well, one of them is that we've actually just sort of like reduced the size of the next one. And we have 3 banks presenting: Castle, Shorebrook and Tandem across 3 product ranges. So please tune in for that. It will be shorter, so it won't go on quite so long. And I probably won't be talking as long either because I just keep forgetting what I say all the time. But please tune in for that one. That's our next one. And after that, we have pretty much the normal schedule of every month. We normally try and do the first Thursday of every month. Summary, we were doing, I'm supposed to be away on Thursday, but that's been cancelled. But we'd already rescheduled this one for today. But we got all the way up to November. I may even think about doing one in December. Who knows? We'll see how they go this year. You can register for as many as you like. We always try and have different lenders. And if a lender does reappear, it's normally because there's been a major criteria change or obviously big rate change or something of that nature. And the other thing we do, if you've not seen it, is Sutton and the Specialist. I mentioned earlier on my first part of today that you can watch all the previous ones. This is what we've got coming up this year. We've got Simon Knight, who's the CEO of Lenco, former CEO of GMAC RFC, for those of you who are old enough to remember that far back. We've also got Josh Knight, who's no relation to Simon, but he's the son of the ex-CEO, also of GMAC, prior to Simon Knight, who's now the Sales Marketing Director of Octane Capital. Everybody knows Roger Morris, who's now Sales and Distribution Director at Tandem Bank, who will probably appear at least twice this year, I would hope. So everybody knows Roger, and he's got, obviously, there's lots of stuff that he will be covering this year. There's a way just from criteria and, what Tandem can do. It's actually educational as to what you can do within the market and just on different bits and pieces. I believe at the moment with Tandem, he's teaching people how to read accounts. Hopefully that includes lenders, all sorts of stuff. Some of the how to read a credit search. Might sound basic, but there's a lot of people out there who really don't know. So that's something that Tandem are doing, but he will be appearing this year. I also got Anna Lewis, Commercial Director at Castle Trust. Next month, I believe, I've actually not keeping track of the dates. Scott Marshall, MD at Roma Finance, will be with us. So please tune in for that. And one more, you can probably gather that's a lady, Managing Director, to be announced soon, and not a 1970s pop star. Will be speaking as well, but I've not actually got that agreed as yet, but I know she will be, I know she'll agree to it. So that will be coming up soon. Feedback and giveaways. Now, in a minute, in any second now, you will see a little little orange, not red, button appear. Please appear soon. It's not appearing. I can't see it. Don't know what's happened. When it does, maybe it's because actually I've got a different screen on from some of you, so it might have already appeared. You can download our GDPR compliance. You can download our product commission and prop fees, all that stuff that I mentioned earlier on today. You can register for our Sutton and the Specialist shows and also watch all the previous ones as well. So that should be coming up any second. CPD, as I mentioned earlier, will be emailed to you by close of business tomorrow, subject to Simon being well enough to do so. So please bear with us. I mean, he does have the flu. I'm surprised you've not heard him coughing, because I can hear him in the background from time to time. He really isn't well, and I'm sending him home as soon as this is finished. He shouldn't really be in today, but without him, the show wouldn't have happened. So, but as I also said earlier, if you haven't received it, we quite often get phone calls the day of, that's just appeared. There you go. The day of a show to say I've not received my CPD, when I've already said that you'll get it by the close of business the following day. But check your spam, please, if you would, just because it will probably be there. A little bit of feedback, please help us out. Google, if you can go on Google, leave us a review, or Trustpilot if you like the show, that would be great, as well as the feedback form we send you. Just a few words, because that just helps us to get our reviews up. It's very difficult getting reviews on Trustpilot and Google at the best of times, because I know myself sometimes I think, I'll leave a review, and I never get around to it. But if you can, these are free for everybody that's involved, including lenders. We cover the entire cost. So just, if you can help us out, that would be great. Please don't go to Specialists Hub, which is a training company involved in something completely different. I think it might be construction or something. So don't go on their site and leave a mortgage review, because no one will know what you're talking about. Big thank you to today's sponsor, which is Tuscan Capital. Big thanks once again to them. And our prize draw sponsor, West One. And I've already forgotten the name of the winner. So there you go. I don't need to look at my, but congratulations to them too. And that's it for this month. For the first one of 2024. Enjoy the rest of your day. Hope you will join us again next month. I forgot to mention one thing. We've just got an exclusive second charge product. And when I say exclusive, I mean wholly, completely, entirely exclusive. Keep an eye on your inbox on your email and the press releases that are about to go out. Because this is a good one, because this could be, you could be writing a fair bit of business on this, and no one else has it, just so you're aware. So keep an eye out what's going on. But until next month and the next one, thanks again for joining us. Really appreciate it. Thank you.